Good morning, my friends, and welcome to the Breakfast Club. We are live from Las Vegas. No, we're not. We're live from Albuquerque, New Mexico. I don't know why I was thinking live from Vegas, but welcome, 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 my friends. We are on the 11th of February, a Tuesday, and live from Albuquerque. You gotta love it. Gotta love these road trips. All right, let's see where we're sitting for today's show. I just want to tell you guys, I met Abs yesterday, and he did not disappoint. What an amazing guy! I tell you, his story is amazing. It's uh, it's cool to see somebody who's absolutely dedicated to the show. He's dedicated to being the best trader he can, and wow, what an honest, down to earth kind of guy. I just love him. Just a great guy. Great guy. We went on. He took me to the Sandia Mountain, and wow, Sandia apparently means turtle in Spanish, and apparently as the sun goes down, it turns into the colors come out on the rocks, and it looks like watermelon. So hence the reason Sandia. It was really, what is breathtaking views from up there. It's so peaceful, so relaxing, and we had a great time yesterday. It was an absolutely awesome time yesterday. So thank you so much, Abs, for a great day. Your hospitality was amazing, and you guys got to meet him one day. I can't wait to get a big reunion and we can all kind of meet up somewhere. That's going to be the big goal. So, did you take my one? Oh, it's right here. Thanks. Make sure I got my card so I can get out of here. So thanks again, Abs. Awesome day, buddy. Can't meet up again today. We're going to go over some charts, do some strategies and stuff. Yeah, great times. Good morning, Max. Hadi, good morning. Good morning. Hadi's next on my list. We're heading out to Ontario in April. We're going to see Hadi and anybody else that pops in there. Russell's going to come. It's going to be a good time. All right, let's get to the charts here. The focus today is going to be more on your entry and more of a stress-free trade, looking for a stress-free trade. So we'll go through kind of a little setup about how to get into a point where you feel like when you hit this button, you're going to feel initially nervous because as soon as you get into the market, you're hoping and praying that it's going to go in the direction that you want, right? So we're going to try and approach this from a level of a clean setup. So you're looking for a nice clean setup and move into that stress-free moment. Because it's important that you guys realize that when you're in a trade, you can continue to let out your mind start to unfold all these thoughts about how much money you're making, and you're really not focusing on the direction or the goal of what that trade is supposed to get you, whether it's short term or long term. So let's look at the Nasdaq. You out of here? Love you, baby. Have a great day. See you later. I'll be back for dinner. So let's look at the 1 hour chart here. So, or the daily. Let's go to the daily first. See where we're at. So we reached that downside objective we were looking for yesterday. We've nailed it. And then the next one down is all the way down to here. So we're just shy of filling that whole thing in on the discount portion there. And after that, we have another discount portion right here. We have the sell side liquidity here. You see how this area from this candle's low to this candle's high is all of liquidity and imbalance. You've got this gap sitting right here, gap here, just BISI or SIBI on one side, all the way down here. So these would be my next objectives, even though you're inside this whole big one right here. These will be specific areas I'll be starting to hunt for now on the buy side. And if we get below that, we have both equal lows down here. I'll never say never. It'll never get down there. You don't know it's never going to get there. I hear that statement. That's never going there. You don't know that. So those are the downside objectives I'm looking for in NASDAQ right now. And then the lower time frames, as we start to get down lower, the lower time frames are going to start to pull you into deciding whether or not we have a reversal going, because now we've hit this level. We're looking for any chance to see reversal, and we've seen one here. And all I'm doing is looking for, do we have a chance to extend going further down, or do we have a chance to extend going further up? And we've got this daily imbalance sitting right here, this SIBI right above us, this fair value gap. If that remains, so that's only going to be a SIBI if this day ends down below that, obviously. But right now it's left a portion of yesterday's candle open. So if we continue to go back and forth in here and creates our SIBI, we have institutional order flow entry drill for continuation on the downside. And we also have the potential to run through it on a close on Wednesday and trade back into it Thursday and continue going higher. So how we use this in the next couple of days will be important, whether or not we use it to continue going lower or use it to go higher as yet to be determined. We still have obviously downside draws on liquidity, so we can favor right now the downside. So as we move to the 4-hour chart, you see, so we're favoring a downside run, and we're looking for a reminder. Will be our little carrot, I guess. That'll be our reminder that we're so far continue to go down. 4-hour chart. 4-hour chart tells us we've got this institutional order flow entry drill. So we've just got this fair value gap created above us, and that daily inversion, we've come up, the bodies have respected the bottom of it. We've also respected this fair value gap SIBI here, and we've just tapped it, and now we're starting to go lower on the 4-hour chart. So we're looking for the high right here, the open, and the mean threshold. Those are the three levels that I look for on the candle we're coming into, because we don't know for sure whether or not this is going to continue going lower, because we have this candle in the way. We have its high, its open, and its mean threshold. If we start to close through its mean threshold, then I'm much more apt to see that come lower. So how it acts in the next little bit, the next 4-hour candle tells me whether or not we're going to go higher, deeper into this range, potentially running back to this candle's wick and its consequent encroachment, which would put us right at the top of yesterday's inversion. Okay, that will put us right in the middle of that candle's wick. That'll pretty much fill in that 50% of that wick. So I'm kind of building a narrative around two different corrections. Still want it to go lower on the daily, but here, in order to get that, I have to get through this mean threshold. And if it's only going to bounce off of here and come back deeper into the range, you can pull your fib tool from here. So these are the kind of ideas I take on a 4-hour chart. Write this down, and you put 50% of that range. If we run back through it, we find support off of here and start to clear this high out here again. We're looking for 50% of that range here. And then a dig into this wick. Well, 62%, retrace it back into that level, put you right at the bottom, near the bottom of the wick at a 70% off from trade entry reversal. Will put you right near the top, or the 50% of that wick. So those key levels, you kind of put them down on a piece of paper and say 4 hour, what am I expecting on the upside? Where would 4 hours put us right now? Where do we end our 4 hours? Is that in the tips for me? So those kind of things I think about. Then you get down to a 1 hour chart. And I think, okay, so now we've got this reversal here on a 1 hour chart. I've ran up, and now I look at this candle here. As soon as I can get a breakthrough there on a body's close, which is right here, any retracement back into this candle, for me, is support to go higher. On a 1 hour chart, I'm looking for this candle's high to its low, and that should put us right back into this city here as well, this inversion. So on a 1 hour chart, now you have to kind of grade your response to this. And for me, everything's a grade. I grade it according to where I'd like to see it bounce off of. So there's this little tiny imbalance sitting right here. It's the top of the order block here. I'd like to see it hit here, right there, and kick off and go higher. If our overall objective is to go lower, I want to see it eat through this one and this one. There's a small one here as well. I want to see it eat through these. And there's another one there. So if we eat through these and close below this, I'd like to see it run, take out the low 400 handles above us to go. And we have further downside. Now that we've hit that institutional order flow entry drill on the 4 hour, I'd like to see this continue coming down lower now. So if we're going to go higher, you got kind of an overlapping idea here. You have to drop down into this level and then go higher, and then look for the next price leg higher. And right now, I like to start to look for confluences that support one direction or another. And these are never carved in stone. So that puts us at 62%. If we end right on this one here, if we take off from here, you're looking around at 62% of that range for a pullback. Okay. Being sick and tired of hearing or talking about or not having, should be using my fingers on this little trackpad. Look at that. He brought me a mouse yesterday. How awesome was that? So I'm using the mouse this morning. Thanks, Abs. I appreciate it, buddy. That was awesome. Thank you. So yeah, so that's our, right now we're looking for this premium level to a discount level. So we're inside this range. So it's internal range liquidity for the hourly chart. We've hit that first level, and I want to see it accelerate through here. Then I'll be aiming for that premium rate. So what I want to see is a break above this level, come back, use this for support, and this level to continue aiming for 50 to 62% of that. So that will be, and then I'll show you how to get into that zero stress trade if that's what our objective is. So let's look for 15-minute chart. So we have our hourly objectives, we have a 4-hour objective, and we have our overall daily objective. We'd like to see that go lower. 15-minute chart. Just kind of walk your way down the chart like this and look for where is the chart, where is the price most likely to be headed. This is also a 15-minute overlap here. It's also a 15-minute overlap here. So we see this first candle get taken to the upside. We don't get an opportunity to trade back into it, and it just keeps going higher. Comes back. It's inside this little imbalance right here. This one here, there's your first entry for a long right here. See, it trades above that level, closes. Sorry, it closes above it right here. Comes back inside it, and then we continue going higher. So you're looking for the premium array up here or here. You hit that. As soon as you see this level get broken, you're moving your stop loss to break even. You can pay yourself at the first high. You're in a zero stress trade. Take a deep breath, let it roll, just let it ride. Don't focus on the money, focus on the objective. And just take that slow tram all the way to the top of the mountain right there. You lock it in, pay yourself. Now you're looking to see if this will trade through it. If it trades through it, it'll give you the indication it wants to go higher. So, and we see this right here. That's our next order block breaker that we want to see take out these lows. Once we get through it, we want to come back and reclaim it to go higher. So you go through it, through this level, reclaim this breaker, and we start to move higher. Comes back one more time, reclaims breaker, and we go higher. So you're just putting your stop a tick or two below the low of the breaker. And you're already in profit. So it comes back inside, gives you the last bit of support, and continues to push higher, and we take out that high. You've got a reversal situation right here. It runs higher, and then there's a small little reversal right here, and this would be a structure break. So we trade below that level, and then we trade below this level. Take the lower one, the last one it took out. Remember, we take out 1, 2, always take the last one. So the last one is taken right here. You trade back inside it right there with precision level off that candle's low. Trade back into it. We leave that open, and we continue going lower. So now we're looking for this to travel through this mean threshold of this candle. We just wanted to see it tap it and leave. Like this kind of thing, you tap and see it leave. That's the kind of stuff you want to see continue on to the upside. Well, it gives you one tick above that high, so it does extend the range, and it comes back through. So now what we want to see is it take this low here and start to dig deeper into this range. In order for that to hold now, we've got to get back above this level and then take out that small level right there on the upside to continue going higher. So we have two different upside objectives we have to get through in order to confirm further upside. And we need this level here to get taken on the downside and use as support. So we're going to see a market structure shift right here, come back into this candle and continue going lower on the 15-minute chart. And then I'll come back to the rest of that after. Let's just go through the rest of these charts because we've only got 20 minutes. I don't know, some of you aren't even remotely interested in our request failed. What's going on there? It's already live. Okay. Let's look at the daily chart. What's our daily objectives in ES. Those are the levels you're really dealing with now in ES. And then you do exactly what we just did there. If you're an ES trader, just go through exactly what we just did there on the way down to the 4 hour, 1 hour 15. And as we get to the 5 and 1, I'll show you what else to do there for your zeroing in on an entry. And Dow Jones, take its daily. It's taking out all those lows now. Always keep these in mind. Once you take out a low, you look for these levels right here as levels to retrace to, and downside objectives. This immediate rebalance right here, you can treat that like a fair value gap, so that would incorporate all that as well. But those are the next downside run. And don't say it won't happen. Never say it won't happen. Dare I say below 40,000. And then there's more below that. There's lots of draws on liquidity below us here. Continue on from there to take out these highs. Euro. Euro's reaching for our objective from yesterday. It's looking good. Lots of upside. I like that. I should have kept that. Remember when we were doing Swissy? We were nailing Swissy like crazy. It was just so good to see. Anyway, we're reaching for our objective now for Euro. It's already eaten through the mean threshold of this candle, all in one candle. So your ass is next. That's pretty much a foregone conclusion. You're going to reach for that buy side. Oil. So far today, we've got relative equal lows below us. And we could see a retracement into all right, I'll go with that. This little box right here, 67.44, 67.72. I'd like to see that kind of tap that, start turning into a wick and come lower, take out these relative equal lows below us again, and that'll take out that final low down there, this relative equal lows. And then it gets us right back into this level here at 65.35. And all of you who kept saying, oh, oil's not going that low, never say never, man. Never say never. Oh, it's hit that one already. There you go. Never say never. So the next one after that is going to be the rejection block down here. And then the low, obviously. Then you're hunting for, so now that you've hit this low, you're hunting for any opportunity to continue to run back up into that level. Usually when you take out a low like that, you trace back into it, like we saw here, and then you want to see it like it did yesterday, just start coming off of that. You're aiming for these lows, and then today it swept the previous low from 2 days ago, and then hit another relative equal low, and then we've had a reaction off that all day today. So you go down to the 1 hour chart, you'll find your reversal sitting right here, and then we look for our premium level. So our discount level is sitting right here. That's our 1 hour. Did you see an entry at a 1 hour chart? Look at that, body traits above it, you come right back inside it, you hit it, you're long right there, and then 1, 2, 3, 4, 5, 6 hours later, you're way inside this range here. Your next upside objective, you're inside here, and then the next one, the premium array is right above you. And could you have got stress-free in this trade? As soon as you get into here and it takes out that high, you go, I'm in a stress-free trade now. I'm going to move my stop loss, so my entry is in here. As soon as I take that high out, I pay myself a small portion there just to put some money in your pocket, take away some stress, move to break even plus the cost of the trade, and then let it go. So as soon as we get a body above here, we look for a retap of this level. So here's the one that takes it out right there. This candle comes back, look at that, comes back in and gives it a kiss right on the schnoz, and then takes you off to the prom. And now you're in this run. You can just go, oh, that's awesome. Now pull your fib tool from high to low. Here, let's make this bigger so you can see the stress-free moments. So we'll just say this was our entry right here. This is our upside objective right here. Inside that huge range, I'm either trading one of 3 different ways. One is I trade to 50%, pay myself, and then use the fib tool to manage my trade on the way up. That's one method. Another method is going from reversal to the very next reversal that you see coming down the other side, which means you'll be able to run all the way through this. If we don't get a reversal, I'm not trading it. I'm not trading or taking my trade off until I see the next reversal. And then I'm going to close that one out, and I can get in that to go short. Okay, that's method 2. Method 3 is just box to box. Right? It's just box to box trading. You enter into this from this one, and you get out at the next one up there, and you move to the sidelines. So this one is stress-free here. As soon as we break that high right there, you move to, you pay yourself a portion and move to the cost of your trade plus a little bit more for coffee, and then you let it go. And the next thing you say is, I want to see a candle break above that high right there with a body. Now, if it just comes back and taps it, I'm happy about that. It can tap the high, the mean threshold of that candle or wick, the high close of the candle, and its mean threshold. And I lose my love for this the deeper we dig into this candle. So mean threshold's my line in the sand type thing. And where does it come down to? Right there, right to the top of the candle's close. And then it leaves. And as soon as it breaks this the high that it just took or started, you just go, oh, I'm happy now. I can move my stop loss up a little higher and leave it to run now for the rest of my trade. As soon as it hits 50%, Take half my trade off, and I'm cruising. Hits 62%, I now move to 50%. It hits 70%, I move to 62, and it starts up here, comes down and takes me out. That trade's over. You're done. Zero stress, real quick, and you paid yourself along the way, and then you got your trade off here. So you would have made 5-6 hours later, you would have made yourself a fair chunk of change in that trade. And that's it. That's it. It's the same setup. I'm sorry. There's so much confusing stuff for ICT out there, but this is the cleanest, quickest way I can get you guys to a point where you're seeing clean setups and a run to liquidity. That's it. That's as quick as I can make it and as clean as I can make it. Did you see me incorporate anything else other than a simple inversion and a take out an old low, look for an inversion, find your entry, and there's one, we gave you 3 different entry points you can have here, the high, the consequent encroachment of that, or the low, and your fail safe is if I trade below that on a close, I'm coming down for this candle's mean threshold, and if I take that, I'm looking for this low here. So you have a fail safe built in there, you've got a good clean setup, and as soon as you see it moving and it's following exactly what you want it to do, you move yourself into stress-free and just sit there and watch the tram, breathe nice and calmly, and just watch the tram take you all the way to the top of the mountain, hit your objective. That's it. And the moment you trade above this one, now you look at this one as the same we did for here. Body trades above, comes back, finds support, keeps going higher. Same thing here. Goes above, finds support. You want to see it keep going higher. So that's it. That's as simple as it can be, you guys. It does not have to be super complicated. That's just internal range liquidity hunt, and you can do the external range. As soon as we break above that, we can expect range to extend the moment we break this high. Simple, simple trading strategy that will pay you dividends if you're disciplined enough to use those principles. That's it. You don't have to make things too complicated. You just keep it as simple as that, and you have yourself an awesome day. And Canadian dollar versus the American CAD. Look at that. We're just killing it now. 69 cents. How painful is that? Bitcoin. I took like 5 grand's worth of hits yesterday, and then I had to come back and, like, this was yesterday's trades. I took 5 grand worth of hits right here from the 10th. I don't count this part. I just look at what I lost here. I thought I've got to make that back. So I did like 5,700 on the next couple of trades, and they were in NASDAQ and gold. I traded those just to kind of get the loss back again. But Bitcoin has the same kind of principle we just talked about. Okay, so you see a low taken, you see a sibling forming, a body trades above it, we trade back into it, you go long. You reach for the premium level, which is, in this case, there is no premium BISI, so you just look for the high, takes out the high. Then what do we expect? We expect a retracement back into the high. It does, and we continue going higher. And you wait for your first little reversal to happen. You have right here. So it trades through it, comes back into it, close off that trade for a long. So you got from here all the way up to here, and you're out of the trade. You're done. You made yourself some money. It's the same principle using that method that we told you. There's another method. It's just using the wait for a reversal, a change in direction to occur, or a break in structure. You could get out of it right here. You see a structure break, you think, okay, I'm on the wrong side of this. It comes back up inside this candle's high or its mean threshold. Continues trading lower, takes out the next market structure shift right here. You go, okay, We're definitely closing below this level. It trades back into it, gives you one opportunity to get out, and then continues going lower. If you're just using the fair value gap reversal situation, that's what you're looking for right there. And you're out of your trade. As soon as it comes back, it taps it. You're done. And then you've collected from here to here. Same principle. That's just Bitcoin. It's the same simple old technique. Oh, look at it over here in gold. Same thing. You take out a low. You see this reversal. Body trades above it. You trade back inside it. You catch your long. You look for, pull your fib tool, look for 50%, pay yourself, take half off, move to break even. It's a zero stress trade, let her buck. Hopefully we can get above this level and then start extending higher. So you get a close above that level. It comes back and taps it right here, extends the range, takes out the highs. Done. You see it reversing right now. And now you keep your eye on that little piece right there. If it trades below it, that long, if you're using the other method, which is your reversals, you're going to get ready to unload that position that you got into way down here. Same simple setup. I tell you guys, it's not a difficult setup. You just got to be disciplined to follow a few rules inside it. Get yourself stress-free so you can enjoy trading. And trading doesn't become this nauseating stress ball in your guts, right? Taking on way too much cortisol. You don't need that stuff. You don't need it. So right here, look at this, Disney. Disney's given us another reversal right here. You're tapping into it. Now I want to see Disney get back into this hourly fair value gap right here. That's $2. Look for, oh, pre-market, forget it. Your pre-market's way down here. You won't even get an opportunity to get in on that. So scrap that idea. Your pre-market's selling down at $99. Look at our daily. See these big open boxes we got sitting down here? You got to mark these out in your Disney as well. There's this big gap down here. There's no volume here at all. Okay, so we have a downside draw on liquidity, I'd say is right here. And then wait and see what kind of reaction you get inside here. If we get an acceleration through that, Disney is on a dive, man. Then we're looking for down here. All this liquidity here, this gap, and this discount box way down here at $86. Can Disney get down there? Yes, it can. So that would have been, on the hourly, that would have been a nice little long right there for a run back into 50% of that range. Pre-market says, no, we're not giving you that opportunity. We've got some downside liquidity to fill in. So don't even think about that, Craig. Just let her buck, man. Your Disney's coming in for some serious reversal opportunities. We can get back up into that $100 range again. And my father-in-law is a big trader of Disney. He loves Disney, and he always likes to see Disney get down into levels he can buy it. He says it gets back to $100 very frequently. You know, you look at the $100 range sitting right here. Disney loves staying up in that $100 plus range. So from a weekly perspective, what are we looking for? Down here and this immediate rebalance right here. So a weekly would be, I got one more minute to go through a bunch of other ones. I just want to see Craig nail his Disney again, 1 week. There, and then you've got, okay, we're opened up now. And here. So there's the draw on liquidity for Disney right now. Even if you look at 50% of the weekly range. $62% puts you right in the middle of the next BISI here. daily volume imbalance. So you can expect to see it reach into that at least. And then again, if we accelerate through that, we're looking for these weekly objectives on the downside. And 88% puts you right in the middle of that weekly, the lowest weekly discount box. So if you're going to trade from box to box, there's your premium box right up here. Your discount boxes are down here. Let's go over to let's go to UNG. Where are we looking now? 2405. I like it. I like it. Carry on up. I've been in this for a long time, so she's looking good. I like this upside objective here. That's the daily objective I'm looking for. I'm just looking for that for the upside right now. As soon as I get that, I'm going to move to the sidelines, take some profits, and wait for this market crash because something's going to, natural gas prices can't keep going too much higher. I'm sure they could just rocket up forever, but I'm going to take my money and move to the sidelines. If you can pay yourself, pay yourself. In uncertain times, stay nimble in the markets. Being in things long term right now, I don't think is my idea of a good time. We've got lots of liquidity sitting down here. Look at that. They've built a ton of liquidity up down at 50 or 527 there. We're back through that level on a close. Now, if we come back and tap it, you want to see that continue going higher, and I'm aiming for this objective up here in wheat. For upside of wheat, I'm looking for here. I guess you can go from here to there. That's my upside objective for wheat. The moment we come down and give this box to box trading. Soybeans. I'd like to see soybeans now kick off of here, start pushing higher, take out these previous day's highs. And I do like the fact that we've now hit coffee's reverse. We've traded below it here. We've come back inside it right there yesterday. And now we're looking for continuation on the downside. And we've got to eat through 376.95 on a close. We can get below that, then we're looking for these runs here, and then look for this old high back here. Cotton and his little socks, look at that. We're literally closed on it, into it, continues going higher. Wait for a body get above here, not just wicks. We could, if right now this could just wick down here and retrace right back into this thing, right down deep. So I'd want to catch that right inside that imbalance. Stop loss really tight. And if it trades through it, you're on the wrong side of it. If we get a body above here on a close today, tomorrow you come down, give it a tap, you'd be just below this level right here. This candle, I wouldn't want to see it start to eat through the half of that mean threshold, a consequent encroachment of that wick, and I'd like to see that keep going higher. And you're aiming for upside objective in cotton is 67 to 68.40. Sugar into the BISI, into that little imbalance right there. Bodies are respecting it nicely. Now I'm looking for a run back inside here to this level right there in 1939. 1935 for upside sugar. Yesterday, live cattle. Gave you a reversal here. See how the body broke above it here? You gotta see this, you guys. I'm not worried about what's going on in the charts right now. I want to show this to you as a simple level. So abs, watch this, take some notes. Watch how clean this is. It's a simple reversal. Look for a reversal through an old low. And this is on a bunch of cattle hourly chart. We trade above it right here. Look at that. You trade into it perfectly. You want to talk about no stress? Talk about it empty. As soon as you enter in, it starts to leave right away, and you have zero drawdown. You want to talk about zero stress, and you're aiming for your upside objective right here. It's a small, little, tiny one, but that's the goal right there. Little tiny fella right there. Okay? And you go, and we have another one right down here. I'm aiming for that side objective. Pull your fib tool on that. Pull your fib tool and march that all the way back up if you want. So your perfect entry, as soon as it starts to get into 50%, you move to break even. Zero stress trade, take a portion off. You're entering into your trade here, hits 50%, take a portion of your trade off. You're now stress free. Let it buck, hit 62%. That's awesome. Now you move your stop loss to 50. Then it goes from there, hits 70, move to 62. It runs to 75, move to 70. It hits 78%, right on the money, move to 75, and it takes you out. You're done. Move to the sidelines. That's that trade done. Who cares that it keeps going higher? Don't worry about that. This is not the psychology you should be talking about. You should be cheering yourself all the way up here and managing that trade. That's internal range liquidity, set up trade model, and that will make you money consistently. All right? Or you trade from objective to, it's my goal. I'm just going to wait for it to get there. And in this case, it pretty much runs straight to it, hits your objective. As soon as it trades through it, you're done. And you go, if that trades through it and takes out the high, I'm in that. I'm going to let her keep bucking. And I've paid myself all the way, and I'll leave a last little portion on to run for the high. It takes the high, pay yourself, salute, high five. If it comes back and you say, if it trades through this on the downside, it's coming lower inside this range. I don't want to mess with that until we get either a trade back through it, or we can trade into it and then continue coming lower. So it trades through it, it comes back through it with a wick, body stays below it. You think, great, now I'm going to go short. And then it comes up, and then it goes low, and then it comes back through you, and you go, oh, it's closed above me. I'm on the wrong side of this. I got to get myself out. So here is your fail-safe candle. Your stop loss is sitting, like as soon as you realize that closes, you go, stop loss moves to here, and I'm on the wrong side of that. You have to develop your rules around this. What we were talking about yesterday with abs, that's your fail-safe candle. You have to decide what kind of rules you want to build around how you're going to wait for that to come back and get you out of your trade. And if it pops back through you, takes you out, you took a loss from there to there. From there to there, and then you say, I'm heading higher, and sure enough, higher she goes. Just because it broke that upside, it broke the downside, so you're trying to go short, and if it goes against you and you go, I'm on the wrong side of that, I'm going to wait for the high to get taken now, and the high gets taken and you never get a chance to get back on it. Do you cry over that? No big deal. You made all that money on the way up, you took a small loss there, and you didn't catch the rest of it on the way up. That's a 1 hour chart. I bet you we could find something there on a 5-minute chart or 1 minute chart that'll get you back in on that. That's just an hourly chart. Anyway, that's live cattle. Cocoa, Sorry I haven't got to you guys yet. I haven't even said hi to anyone. I'm just taking my time plodding along here. Nice reversal there to the discount. It's already hit the discount portion now. You trade it back above it. You're inside it. So now you're between here and here. And you're above 50%. So I wouldn't touch lumber right now. These ones are all American stocks that apparently paid really good dividends. And they're into some serious discounts right now. I don't know what they're like for overall, but if they're things you're interested in, look at them as it looks like the banks are all taking a hit pretty hard right now. Ford, we're still waiting for Ford to keep coming lower. If I have to wait until May or the end of March, I'm looking for the end of March, April, beginning of April to catch this run back up at Ford. I think when they realize the tariffs are not a great idea and that they're harming the economy more than they're helping the economy, they'll start to realize that the tariffs are bad, and this depression that you're starting to go into in the States here, this little recession that's being stimulated. It's being stimulated by these tariffs apparently. So if you start to go into recession and around the end of the month, everything starts to sort itself out and you start to see the markets rising again, you'll think it's all about tariffs and stuff. Think about where the seasonal tendencies are right now, where you expect lows to occur, and when the next reverse is due to come, end of March, beginning of April, up into May. It's typically where you'll see a turn. These are a bunch of Canadian stocks that are supposed to pay well on some dividends, or they were last year. I don't know what they are so much this year. These look like they're taking a huge hit. Here's Brookfield Infrastructure. I haven't even looked into those. It's just something I had on the chart for a while. Royal Banks on the decline. Laurentian Bank. I'm still looking for that to get down into this $25 range, and I'll snap that one up. Take some of that. Bank of Nova Scotia. Remember I was telling you guys about this level? When it was up here, I said, you watch, it will come back to these levels. That level is a marker. And look what it's done. It's come back into it and through it. This one hasn't quite come there yet. It went the opposite direction. But look at this one, Bank of Nova Scotia. It's coming back down to it. Look at this one here, Laurentian Bank. It's already through it. This one here, where was it? Right there. That was the day. It went straight through it already. So when you see these things, suddenly it gaps way down and starts to come back up again. Look for that as a target. I've seen that in so many stocks before. It's not a guarantee by any stretch, but watch it. I was telling you all about that. That would be a level we'd be coming for, and it's just heading right there. So we're looking for that Nova Scotia to kind of follow suit, like the other banks have been doing, and TD. TD's really doing well. It's holding above its 83.77 right now. If you can stay above that on a close, you're doing all right. And TD's just been through some big financial crap anyway. So anyway, let's get back over here and say hello to everybody. Where are we at? Who's first through the door this morning? I think that was, wow, you guys have already been chatting already. Max. Good morning, Max. And Hadi, my friends, how are you? AI, good morning. Ooh, I'm in Georgia. Georgina. You're in Georgina. All right. Does Georgina wear the chart? Anyway, Craig, good morning. Stopped out green, old crude oil trade, looking for to buy the dip. If D says it will go there, it can. Good morning, everyone. Abs, my man. Just wanted to say, hopefully, everyone gets to meet D. What an amazing prayer. Oh, good time yesterday. Thanks. It was awesome, Abs. It was a great time, man. I'm really impressed with you. You guys got a great story. You talk about tenacity and a stick to it kind of fight his way back through hardships, and he's got the love of a good family. Man, I love it. I love it. Great guy. And thank you for the kind words, Sir Abs. Appreciate it. Curry, hello. Quick Solutions, hello. I'm so happy for you guys to meet. Wish I could have been there. We're all going to do it. I feel it one day, man. I feel we're going to have this big meetup. Everybody's going to meet at some place, have a great time. I'm looking forward to coming back here and seeing the great balloon festival they have here, where hundreds of balloons get launched into the sky. And the festival is supposed to be quite amazing, 7 to 10 days long. It's in October. I'd love to be able to get back for that. Won't be this year, but I hope to be able to get back to that soon. It just looks like an incredible festival. And I get to hang out with my buddy Abs again. And my wife's making friends here. This is great. All those methods are amazing. Derek, yeah, is Derek feeling better? 1.45 CAD exchange rate. That makes everything expensive from the US already. Yes, it does. Good morning, all. Shepard, good morning, my friend. Welcome, welcome. Craig, go Disney. Yeah, I just want Disney to take a nice little plunder there and then get back into this level and start catching a nice ride up. I'll have to let Charlie know about that. He probably already be watching it. Yes, we will. We are, my friend. Bought Disney under $100. Abs. I already know that Darren is a dreamer, a manifester. So are we. Yes, you guys are gonna make it happen, man. I want this all to happen for you guys. Um, yeah, I don't think this dip has anything to do with Paris, regardless of news. We definitely needed a pullback. Okay, so where are we at? So we've had a run below this low right here. We've traded back into it, and and it's a simple thing you're looking for is the range extension. We've got the range extended, and then we want to see if it trades back into that level and taps it and goes. It doesn't. It runs all the way through and closes above it right here, right there. It closes above it, and this should be right there. See how it closes above it, and then we come back right inside it, right to the bottom of it, and now we've extended the range. So as soon as it breaks through that next level, which is right here, we want to see, you'd like to see that last little range right there, hold price, come back, give it one little tap, and then start going higher. This just used this one. I just ran right through, took out this high. So range is now extended. I'm looking for this level and that candle right there for support to continue coming higher into that range. Oops. And we're talking about our 4-hour retracement we're looking for first before the big dive down, like we did down here. If this pulls back and drops through this level, finds support at it, and then continues to drop lower, then we're looking for this little tiny imbalance down here to close and then come back down deeper into this range. Otherwise, still marching higher. And we're looking for those key levels on the 4-hour, I think it was. Yeah, 4 hour, 50%, 62%. So they're sitting right there above us. See that 1 hour one? We wanted it to come back into first layer, second layer. So there's your, well, here's your first, second, and third layers. Remember that first one we talked about? Went all the way down to the second one. Start pushing higher. We're still inside that wick, remember? We're still inside that uh, big order block here. So it could come all the way down to the bottom one. It's come back inside it. Now you're looking for higher prices. Again, look for 50%, 62% for the upside. I'm not in this, so I'm just gonna let her buck. Darren, you must be enjoying the weather in Albuquerque, given your digits in Alberta. Yeah, I had somebody come to my front door, so my cam went off yesterday and looked, as like, oh, they had a dump of snow. Ooh, here I am on top of this mountain with abs, just chilling, looking at this amazing scenery. And just, it was so nice up there. We got up there and on top of the Sedina Mountains and just enjoyed the snow. Had some laughs with some total strangers. Every time a guy and a girl came up there, I'm like, I look at the girl and go, you ready? He's pulling the ring out. He's going to get the ring. She'd be like, no, I don't think so. We're having a good chuckle. We're just sitting up there talking. It was so calm, and the sun was just the right temperature. You got the snow around, you got kids playing in the snow. Oh man, it was just like it was an amazing, it was an amazing, amazing day. So thanks again, Abs. It was great, great conversations. We had and just sat up there for hours, enjoying the view. It was great. I'll always remember that. Took a lot of pictures. I'll post a couple of pictures on our Telegram channel up on top of the mountains. And yeah, it was beautiful. Very romantic, Abs. Our first date, it was beautiful. So see how we're pulled back, waiting for the candle to finish up, right? Let's go to a 1 minute chart now and see what we got. You guys see it already? Your eyes should go to it right away. Look at that one. Oh, we haven't, well, you know what we haven't done? We haven't done the usual marking up the charts. I should do this first thing in the morning, you guys. It's the first thing you should do. Go to your charts right now and mark this on your charts. This is a habit you should get into every freaking morning. It's right here at the low to the right there. You're going to put in your more, and then you're going to put in your first fair value gap. That will be Tuesday. And then you'll put in your first where's the 1 minute? There's the right there. Midnight open. Then you move to 4 o'clock. You put in your 4 a.m. candle. And you'll see how these levels just keep getting snafu'd every single time. There's the 4 a.m. And we go 4 a.m. And then we go to our beloved, and thanks to our buddy Abs, we have this guy here. Abs has been studying this for years. Michael mentioned it one day and then didn't mention it anymore. And we have the good fortune to thank Abs for this little amazing candle here. Michael doesn't mention this anymore, but take the 6 a.m. candle and watch how much it gets worked. And then, last but not least, my buddy Hadi has noted the 8:30 open. Right there. That's the 8:30 open. Look how these levels have been worked. Crazy. And here's your first fair value gap inside the midnight open range and inside the first fair value gap of the midnight open range. We have the midnight candle. We have the 4 a.m. candle. Look at the sensitivity off of that. And the 8:30 candle. And the 10 o'clock news is coming. So we sit and wait, my friends. We sit and wait. We won't tell the wives. She's already seen the pictures. She's seen the pictures of us, Abs. She's like, did you take pictures up there? I'm like, yeah, I took a ton of pictures. So she took a bunch of pictures. Do you know where they went over to yesterday, Abs? I came back. They'd already gone for dinner. And you know where they were? Over at the sawmill. Over at the seesaw place or sawmill place you're talking about. They're already over there. She's like, come on over for dinner. I'm like, nah, I'm already upstairs now. She goes, no, we're all waiting for you. I was like, no, I'll just wait here. I said, if you can bring some scraps back from the table, maybe get a collection off of people's plates. I don't mind surviving off of whatever scraps you can bring home. She's like, oh, brother. So, yeah. We're going to go there tonight. I have to be back for dinner tonight, Abs. So just letting you know, I got to be back for dinner tonight. So here's your discount or your premium. See how we've traded through it? Come back into it right here. Watch how we respond inside here. Now, you want to see this roll over and start coming down deeper inside this range. Or we want to see it pop through that, find support at it, and then extend the range higher. Look at this nice new price leg here. So I'm liking that 50% up here. That would get us to the 830. Look where it brings us, right to 50% of that range. That's the next price leg higher. Nope. Okay, so there's your open at 10 o'clock. Came all the way down to the old low. Discount would put us right down inside this box a bit deeper. So you got this one right here and here, so just keep your eyes on those two. That may be it right there. I'll just wait for this to close above here now. You kind of give this news a few minutes. Wait for the 15, 16, 17 candles. If it takes off on you, then who cares? Don't sweat it, man. Look for this is what you have to start saying to yourself now. This is what I demand. That's what I want to see it do now. I want to see it close above here. And I want to see it come back, give that little kiss. If it doesn't, then I want to see this level right here. Demand that of your market and wait for it to close. Look at the range that you're in and say, is this a premium or discount? You'd want to see this come back into a discount level. If that runs up a little higher, that'll get you more closer to your discount. So look, so your body's closed. We've already extended the range. So if you want to see the range extension, you don't want to see that wick take it out first. right? Because that's our first immediate goal. It's already been reached and didn't give us an opportunity to get in. So less luster, less love for that. So wait. You're right back inside this. Change it to this actual reversal. We took out these lows right here. So you've got one here, one here. We've traded right through the top one on a close, and we trade through the bottom one on a close. So we're looking to come down deeper in the range. Again, we have to close below this level right here. So 535. Just watch that. We're not clicking trades. The range has already been taken for the high, so I'm not in any rush to take anything here. We're just going up in a gondola right now, just kind of chilling, enjoying the scenery, waiting for things to flesh out here. Hasn't mentioned it until today. Apparently, there was a 6 o'clock news that he wanted for us to study. Oh, interesting. You should have went. They have the brewery, good beer. Yeah, I wasn't in the mood to go. It was a great day. Didn't feel like being around all this conversation about schools and stuff. Not that I don't support my girl, because I do. All right. So if we're not getting our 430 already, and we're deciding to go lower, heading for our little overall daily objective, it's our carrot down below us. I want to see these levels get taken to the downside. We're looking for a range extension now. If this is a seek and destroy, we want to see this stop, freeze below this level, right there, like that. Come back, find a little kiss off of that, and then you can go bing, you can go short. Off of that. Oh, I didn't get it. I was trying to get the short. So there's, and then right now, abs, you'd be going into break even, your zero stress trade right now. Look at that. That was less than 30 seconds ago, and we're stress free. Do you see that? I was trying to hit sell there. I didn't have my trade account set up, but whatever. Then I'd be like instantly right here into break free, stress free, and you're going, I'm good. That's the rule. We break below that low, we come back, we give it a kiss right here, and I was going, bing. He saw me trying to hit that sell button. I didn't have the trading thing connected, obviously, but right there's your short. You let her buck, and now you're into break even. We're looking for this candle to provide a level of support now. So pay yourself right at that low, and if it comes back and takes you out, who cares? We want to see it come back into this candle. It's mean threshold, no more, and come lower. Just keep coming lower. Extend this range here below that level again. If it trades back into that level one more time, it starts to lose. You can still trade it from here to here, and then it starts to lose its love for me if we start to dig too high into that. Because then we're starting to look for a potential low taken, reverse, change direction, start heading back up to a premium level. So right there. And right now you're laughing, abs. You're just laughing. You're stress free. You're like, that's it. That's a simple stress free trade. And it's the same kind of setup I show you guys every freaking day. Every day. If it comes back and taps that level right there, you're out. You go, okay, I'm done. I made a bit of money below that level. I paid myself, and I moved to stress free real quick. I'll wait for another setup. There's a little tiny sucker right there. Stretch it out right there. You see it? If we get back through, then these are the two levels I'm looking for, here and here, all the way up to there. So see how we've traded right through it? And you even got to pay yourself that little portion inside that candle to extend the range, and you paid yourself. And now we're on the wrong side of it. But you paid yourself, and you moved to a quickly to a stress-free situation. And if you see this going on, you're like, smile to yourself and go, I'm glad I follow a set of rules. I'm glad I follow a set of rules and I pay myself. As soon as I can get an opportunity to pay myself, I will pay myself. I'll move to stress-free. And if it comes back and gets me, that's okay. I'll reset, get rid of myself, ready for the next one. This one has run through this one, and it's run through this one. So what did I tell you? If it runs through two of them at one time, we look for the second one. Look for the second one. Right there. So I'm going to take one long there. I'm trying to take it right off of this thing here, all the way to here. All right. So watch right there. It can come back, and I'll add another one down here. If we can get to the mean threshold or the consequent encroachment, I'll add one there, and I'll add one there. And the stop loss will be just down in here. So if we take out this candle's high that we just hit, I'll move to break even and turn this into a zero stress trade. Don't worry about looking over here right now. Focus on your trade. Where do you want it to go? Stop loss. We'll move to profit. Zero stress. You come out with 120 bucks. If it comes back against me, and you're just breathing, man. Just breathe. Just breathe. Breathe into it, man. Just breathe into it. And it just came back and gave me a little kiss on the nose. Took me out. Okay, I'm out of the trade. 100 bucks. Didn't cost you anything. Now you say to yourself, could give it a little bit more room and I could get my trade, and I'll be looking for up here. Look for this first fair value gap up here. Again, don't beat yourself up over this. I have my stop loss tight. I'm okay with that. This is a 1 minute chart. Is this where we're going to get more setups? Absolutely. Watch for this little level right here. This is like the silver bullet type thing. There's your 10 o'clock. Runs through, comes back, gives you your silver bullet extension. Look for your premium array up here. If you're pulling your fib tool from high to low, you've already paid yourself on the way up here using that other method. And then the third method we showed you is wait for the reversal. So watch all three of those right now, abs. Just kind of, that was our entry. I pulled the stop loss tight, came back, got me, literally just tapped me and took me out. Looking for our premium box, which is just up here. 50%, pay yourself at 50%, move to break even, and 62%, you move to 62, move your stop loss to 50 now, and it runs to 70 right there, comes back to 62, you'd be out of your trade there, and you paid yourself a last little portion there. So you got a run from here to here, you're paid out. You paid out. Now, if it reverses here and comes all the way back down again, you literally caught from a great entry all the way up to a nice 70% paid yourself. You had 20% left of your trade, and it came back and took you out right there at 68% or 62%. And you made all the way from there to there. And you didn't hit the premium box, but you got paid on the way up. And if your premium box doesn't get hit, who cares? You got paid on the way up. It's internal range liquidity you're paying, you're reaching for. That's all. You're just trading these internal ranges. and just breathe and just breathe. Enjoy it, man. And now you see this reversal happening. It's changing direction. It pretty much comes right back from this one here to that one here. That's why that fib tool works great for catching your internal range payouts. So now we've traded below that. Look for a run back up into here. Now the ideal one would be a entry right here for a short. If it trades through it, comes back to it, taps it, and says, I'm going to go higher for this level, you can break even, get yourself out of that trade. And now you're in the middle of the range, so it's not worth taking for any other reason other than just watching this right now on this level and this level. Yeah, quick. If you're looking for a word to give it, you can call it manipulation, you can call it weakness, whatever you like. Just stay inside the range and stay on the horse. The words, whatever you want to attach to it, is entirely up to you. You're just adding more noise to your your charts by defining what you just saw there instead of just saying, "Who cares? I don't care what I don't care what just happened there. I'm just staying on the horse." Right? It's that simple. Take all the stress away from trying to find all the names, and I don't care what you call it. I don't care about the fundamentals. I don't care about anything else other than the fact that I stayed on the horse and caught that for a run for internal range liquidity and paid myself. That's as ignorant as you could be about the whole thing and oblivious to everything else that's going on other than just staying inside price action. And I don't have to give it anything more complicated than just looking for an entry, looking for an exit, using a fib tool to manage it, and move to the sideline. Just collect your change. Because all the time everybody else is drawing trend lines and they're trying MACD convergences and they're trying all that other stuff and stressing out over calculations. You're just going, oh, I'm just staying on the horse, man. I see a reversal going on here. I'm looking internal range here. If it trades through that point and closes below that BISI, then I'm looking for a range extension. And we're closing below that level here. So we traded this one, traded below it, opened right on it, and now we're coming down to the discount. So if trading from box to box, that one's done. You traded from inside here on the fib tool on the way up. You didn't get the upper box. Who cares? You still got your internal range liquidity off with the fib tool. This one here, short from here to the first box. There's your box to box. If it trades through it, we want to see this close, and then mean threshold's going to get taken, and then we look for a range extension. That's what I want to see. And if I don't see it, then I'll just go, where did you go off on me here? So we've closed. We have not closed below this level yet. So I want to see a price close below the midnight open candle. And Hadid's 830, you see his 830 level sitting right here. And we're back inside that range. We're looking inside the 4 a.m. candle. We've got everything's kind of overlapping and we're sitting right inside there, right during news right now. So could this end up being a lot of bouncing around? Absolutely. And see how right in the middle of this larger range, we're sitting right in the 50%, could go either direction. So here's where you just develop patience, some nice breathing techniques, just to sit back and relax and let it do its thing. If you guys haven't had a chance to get to Albuquerque, I recommend you all go and then get to the top of the Sedina there, the mountain. It's a gorgeous view. It's a gorgeous view up there. Come and meet Abs. Great guy. Tell you, you got to come meet him and sit down, have a drink, have a coffee, and chat about the charts, man. Okay, here we go. So there's the discount box right there. We've traded below it right there on that close. Just came back inside it, looking for this small little discount box here to get taken now. There's a tiny little one right there. I haven't posted pictures yet. My phone, I wait till we get downstairs. Well, I'm going to see abs again today. So they got better internet downstairs. I can see you guys responding on the little pop-ups on my phone, but when I go to the actual app, I can't see anything. It won't let me post anything in your thing there till I get downstairs closer to wherever the little driver is, the internet driver modem, I guess that's what it is. Then we're looking for, I can give you some pictures there. So here we are. See how we've traded below that level right there? Coming back inside it. We can come all the way back inside this one, that's fine. Now I want to see that roll over here and come lower. So I'm going to go first sell right there. And once again, I had a trade come on here last night. I took a trade. It didn't come on for 7 minutes later. The trade finally popped onto the chart. So I just tried that there. So now what I have to do is I have to go in here, I think. And I have to go paper trade. I have to close out the paper trade, log off the paper trade, then log back in, connect, and it should pop up there. There it is. That's how you gotta play with it now. So now as soon as it takes out this low right here, I'm good to move to the sidelines, and my stop loss right now is going to be just above that high. I want to be, is that where I want to be? And once again, it's not putting my stop loss in. I'm kind of hoping it took it. That's what I hate about this freaking thing. Let's see if I log out, log back in, connect. Yes, it did take me out. So I'm on the wrong side of it. Wait. That's it. This is too much resistance going on in here now. It's not acting the way I want it to act. You just want to see it come back and tap this, not driving wicks through. So move to the sidelines because we got a premium level right here, a discount level here, this little discount level there. We traded through it. And now we're back to this level. Now watch it roll over and come back down. And those wicks is what do the damage. When you want a level of precision and the wicks are in those wicky do damage moments, wicky do damage, they just come in and smash you if your stop loss is tight. If that takes off now, you'd be like, oh, it wasn't so bad after all. It's a good thing I got out when I did. And it literally stopped. That candle's low. It literally closed above it right there. Now you're looking for higher. I'm looking for this section in here now. Just a few ticks. So look at this candle's low here. It is 452. Look at this candle's close, 453.75. So 1.5, 1.75 handles above that level. It came back, tapped into it, and now I want to see that go higher. I want to see it go higher. And if it doesn't go higher, then I'm glad I'm not playing around in this because it's not acting the way I want it to act. If it comes back through this level again now, right here on the close, I want to see it get below that little imbalance we saw right here. And then we're back into going low again. Stay on the horse, man. It's going to make you look wrong over and over again. You've got to be prepared to change your mind quickly. Never settle on something. If you see something breaking, you go, I'm on the wrong side of this. Change your mind. So right there, If it trades below that on a close, I'll change my mind again. And we're looking for lower prices. And then I'm looking for this to close below this little box right here. Now you see how you don't need to be in this. We took a loss. Who cares? Who cares? There's going to be, you're going to easily make this back here. Trade below it. 6 seconds, 5 seconds, 2, 1, right there on the close. Look at that, right on it. Taps it. Now I want to see range extension. So I'm going to go short on that. There's a range extension. I want to see that continue coming lower now. It's worked this all in here. It doesn't need to work that anymore now. As far as I'm concerned, that needs to start moving lower. If it takes out that low, I'll move to break even. And you would pay yourself if you had a bid on there. And the stop loss this time will go above that little box, right? It'd have to be up here again. I don't want to see it get back through here, and I don't want to see it get back through here. If it gets through here and then takes that out, then I'm definitely on the wrong side of it again. So now I'm just going to slam that to break even plus the $100. This has got to get some legs now, hit through 50% of that. And now you're in a zero stress trade situation. So you just kind of chill right now, right? You're just following that rule of, okay, it took me out going back up, but as soon as it starts to take that out again, and on the downside, you go, okay, you've done your damage up in here. There's a lot of work been done. There's a ton of liquidity that's been worked inside there. I want to see that start to extend the range down now. If it comes back and takes me out, so I'll take $100 off of what I lost in here. Now, typically you want to see a body get below here and then come back and just tap the edge of that and start rocketing down lower. The fact that we just got a wick down into here into the midpoint of this candle and that 1 hour fair value gap below us, you've got to see it start digging in there with some sense of urgency now. It's got to start picking up the pace. Your zero stress here, abs. See that? You just kind of relax now and let's let it do its thing. We're in a zero stress situation. We're not worried about what we lost up here. Okay? You're not worried about that. Focus on where we're going. So I'm aiming for that objective here. This is my next hourly one. So move some there into some profit. You pay yourself there. We've only got one on, so we're just going to let her buck now. We're just going to look for if it comes back and takes us out, or you just close out your trade here. Let's just take our money back, make the money back that we lost up there, and now we'll get back into. Sorry, I'm just trying to think about some quick way to reduce some of your stress, because I'm thinking if I was a person that was worried about, oh, but I'm still under, I was $600 in the hole there. So get yourself back to break even, then clear your head of anything, any debt you owe right now. Because right now there's, you say, okay, yeah, but you're still $500 in the hole on that trade. If it comes back against you, you're still under 500. Okay, well, clear that from your mind. So you clear your bad trade. You got back in sync with the market. You made your trade. You made that money back. You cleared that out of the way. Columns clean. You've washed your you're bored now. Clear your mind. Focus on the next trade. That's it. That's it. That's it. That's all you got to do. So I'm just trying to play that one for clearing your mind if that little fail back in here, because that's in your mind, it's going to linger, right? And you're still going to worry about that. So it won't be stress free because yourself's like, I'm still in debt. I'm still in debt. Clear it. Get that out of your mind. Wait for your next setup. Okay. Does that make sense? So that's why you unload it right there. Or you could unload it right there. I'm trying to treat it like if I was a person who was worried about trading right now and I was a person who was kind of sweating the stress, because that's the focus I want to kind of give to you guys right now. If you're stressing out over your trades, then pay yourself there. And the fact that it continues to go here, which is what we were looking for, and I closed out the trade. That's the part I want you to kind of get on into your head and clear out the clutter that's in your head, and you can continue to catch trades like this where I wouldn't have worried about this anymore. Just let it ride, and then you would have made that all back, and then you would have moved into this candle's high. So you would have been another $200 under, and you'd be in probably $500 or $600 in profit right now. And you're looking for our carrot, our downside daily objective. Remember, we were looking for that downside objective over here. Carrot, run in, fill the rest of this. I think this is where we want the carrot to be right now. Okay. And if you still feel any residual tension or unease about having taken a loss on that, then don't take a trade. Take some deep breaths and wait for another setup. That's it. That's all it is, man. You shouldn't have to have tons of cortisol ripping through your body. It should be nice and calm and casual trading, man. It's tension-free Tuesdays. That's what this is going to be. Tension-free Tuesdays. Let's get a little sunshine in here. It's a beautiful morning. Look at those hard-working dudes out there. They're just scraping the roofs. The roof is on fire. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's 10 guys working that roof. Hard-working dudes early in the morning. Bless their heart. Gotta love them. Working it, working it. I would have come back and got it anyway. So we paid ourselves. That was good. We wait for, we've got this little guy right here. We got this guy right here. Right there. We got right here. We wait for a setup. We wait for a body to get above here, or we'll wait for a retap of this little guy down here. Stop loss would be sitting down here. Don't look at the candle. Don't worry about what it's doing right now. Is it coming back to give us what we want? If not, are we still in a discount portion here that I can grab this candle to run to that level? Keeping in mind this mitigation block right here. Now what you could do is do one of these things here like this. You can go, I expect to see a limit order right here, and I want to put a stop loss right there. If I'm wrong, I don't want to see it close below that level. So that's all you get at the bottom of the fair value gap hourly. That's the only opportunity you're going to get to tap me in and take me out. I'm only going to risk $300. So I want the consequent encroachment of that little gap. I don't want the very top. I want the very bottom of it or the middle. I'll take the middle. And then if I see one wick get below that, I'm out of it before my 300 gets taken, because the very next candle is my there. I'm in the trade now, and now I wait. If I see so much as a wick get through that thing, I am on the wrong side of it. Now, as soon as it takes out that high, if it does, then I'm looking for a run to this internal range liquidity. So you're looking for 50%. So we're going to trade internal range liquidity from here to here. It's 50%. I'm going to move my stop loss to break even because I've only got one on there. Zero stress, man. Let's move into zero stress. The moment we get above here, it's a zero stress. If it takes me out, I'm not gonna take a full hit unless it rips through right there. See how that wick? I'm out. Rule, wick took that little low, so I'm out. That's the rule you got to say to yourself. Say, well, why didn't you give us some? No, that was the rule we said that we'd take, and there was a wick went through there. I'm out. So if it goes up now, I don't care. If it comes through, you're going to be like, ooh, good thing. It did not act the way I wanted it to act, not even in the slightest way to get out. What we're doing now is I'm trying to develop discipline in your rules. Be disciplined in your rules, because right now, see how that stop loss that we're sitting right here would have been taken. So that would have been a $300 hit versus a $45 profit. The moment I saw that wick, it retracted back. I got out, made the cost of the trade, and now it wicked. Now it's closing below, so I'm expecting this to come lower now. We've traded back into that level. I'm expecting this sell side to get taken. Do you see me stressing out over this? Don't stress, man. There's no reason to get stressed out. Are we still live? Are you guys still getting this live? I haven't seen anybody making any comments lately. Let me see on the are you all still here? Well, let me post on that, so I guess. Yes, we're live. Okay, thanks. I didn't know if anybody was still with me or not. So I want you to develop these rules, these stringent rules over what you expect to see out of the markets. And if you don't get what you want, then don't move to the side. You see how it's leaving now? What's going through your head right here? I should have been in this. I could have stayed in this. I should change my rules. It would have taken me out anyway. Even if I was one tick below that low, it would have taken me out. Then you get frustrated because now it's emotions. You want to be in control of your trade. You want to be in control of everything. So develop rules that are very specific. If I see this, then I'll take it right there. See how we're going? You want to go high when you get above it. You want to go higher. So tap that and go higher. The fact that you're through it again, you're out. And we're in this high resistance. Below it, go lower. Above it, go higher. Below it, go lower. That little inversion, see, now we've finally extended that range. So am I glad I got out of that now? I was glad I got out of it the moment I saw that wick pop through there. Good. It came back, gave me 45 bucks. And I didn't have to be having all this uncertainty. And I wanted to go higher. And look where we are now. Does that make sense? So you just kind of develop a level of discipline. So when you hit that button is you're going to make you money. That button is going to save you money. How you look at that button, really important. It's not a fear thing. It's a, I love that button. I love that button. I'm going to buy, I'm going to sell. It's going to be my savior. It's going to pay me something. As long as I follow those rules. And that's why you got to write those rules down or have them in your head so firmly that as soon as that rule's broken, you get out. That's the discipline. That's what Hadi has. He's got that level of discipline. When he sees it, he'll take it. When if it even twitches against him and he doesn't like what he sees, he's out. You'll hear him go, I'm in. Oh, my stop loss is super tight, and now I'm out. That stop loss being that tight is his reason for him to say, nope, it needs to act here. And if it doesn't give me what I want, I'm not taking it. Still here, got up early, have tea time at 12 o'clock, so going to get early today for me. Good for you. I'm not even trading this on live account because this internet is way too unstable for me. So I'm just going to do some little trades here in front of you guys on a demo. And that's it. I'll wait till I get back to Canada. Now do you have that feeling of FOMO? FOMO? Fear of missing out? You got some FOMO right now. Let it go, bro. No FOMO for the bro. I've moved over to ES and YM as the amounts of risk seem to be a bit less, and the volatility isn't daunting. Okay. So we've retapped this low. So what I want to see now is just pull off of here and start coming lower and leave that last little portion open. I'm not in the trade, but that's what I want to see. I want to see it keep coming lower. That portion stronger for me if it stays open. ES, let's have a look at ES right now on a 1 minute chart. You're on a 1 minute chart, Derek? Same is almost exactly the same chart. There's your gap. There's your gap. You've come into the consequent encroachment, or pretty close to it. This is an institutional oil flow entry drill for continuation on the downside. See how that level right there is broken? We come back up inside it right here, and boom, drop down below there. Institutional oil flow entry drill, continue coming lower. So even this little change in direction right here, supported. We did not get above it to go higher. You get below it, come up underneath it. So the fair value gap get taken to the downside. It becomes inversion. Use it as support. Take out the low, pay yourself, move to break even, and zero stress. And just wait, let it ride now. Let it ride. Same thing I show you every morning. This is what a fisherman does. They go out there into the waters, they get the same old boat, start up the same old motor, get out the same old fishing rod, or rods depending on the method they were using for the day. Same tackle, their favorite tackle. They go to their favorite fishing hole and they wait. As soon as they get the bite, they set the hook. When you've got, you know you've got them nailed, put the net in the water, the guaranteed profit. He swims into the net. Next thing he's just hauling it in. Here's my fish analogy for the day. But you know what I mean, like find, there should be no stress just looking for you got you on a 1 minute chart. You're going to find a setup in here. We found like half a dozen of them already since the market opened. We found a whole bunch of them. We took a $600 loss, then we made it back. Then we saw the price was going to change. We actually made more than our break even. So celebrate that. Like, yeah, damn it, I'm catching some serious vision here, man. I'm seeing this chart. I see when it's going to turn. I see when it's going to turn against me, and I make money anyway. I make money anyway. Get good. Get happy with that, man. Don't say, "Oh, I dodged the bullet," or "Oh my God, I was so close to getting." No. That's like, geez, man, I just saw that chart turning on me. I took a loss, and then I was like, I'm getting that back. Got it back. Saw price changing on me again. Celebrate that. Like, pump. Yes. Ingrain in your brain positive shit. You saw it. Celebrate that. It acted exactly as you wanted. Celebrate that. Don't reward well-seen trades with, well, you know, I was lucky there. I could have got burned, or oh, I was so lucky to get. I didn't get this. I didn't get that. Didn't. That's all negative shit. It's all negative stuff. That's why in hypnosis we don't ever talk to the unconscious mind with a negative, because it can't process it directly. So you never say to a brain in hypnosis, especially, and say, you can't do that anymore. Your brain just thinks of it as can do that anymore. It doesn't process negativity that way. It only processes do. An unconscious mind is just there to protect you. So it creates fear so that you don't feel threatened. If you're unconsciously load into your brain fear of threat, loss, death, damage, anything that's bad to you, your unconscious mind will do everything it can to find the opposite of that. Here, this is bad, so don't do it. Like, this is bad, so this is what's going to protect us if we don't do this. It doesn't process the negative directly. It finds the positive, which is not doing that is what's going to save us. Okay, so that's the positive thing. Don't do this, right? It doesn't look at not doing it. It looks at what it should do. That's protect you. That makes more sense. Oil, let's oil up. Call it a breaker. Thanks for this mouse. Abs, appreciate it. It makes my life so much easier. I sit there like this with 2 fingers on my trackpad. So right now we're still inside that breaker, finding some support at it. The mean threshold of that breaker, if you go from wick to wick, it's still being supported. If you just go body to body, it's being supported here. If you go to the high of it, the bodies are still respecting the whole range of that candle. So if you start to lose that on the downside and you come underneath it, I treat it, it's almost like that fair value gap inversion, and you've got a small one sitting right here too. So you've got a BISI right there, and there's a small tiny imbalance right here. You're already below that. So 51% shorter just because of that. And I want to see if we get below here, then I'm like 60% into this range again. Bitcoin, what's that up to? Abs was playing some rockin' music, man. He was like, we got in his car yesterday and he had this channel that was playing rock and roll from back in the day when we were kids. Awesome tunes, man. They were awesome tunes. So immediate rebalance right here. Here's your discount box. Right to that candle's low right there. From this opening here to that candle's low. You'd have to take it all the way up to that candle's body. So there's your premium box, discount box. Get through that. Look for, oh, your next macro is about to begin. So Bitcoin, you're looking for Bitcoin. If it continues to drift down through here, is it the same one? No, that's index and Bitstamp. I use this one during the weekend. I'm looking for down here on Bitstamp. That's the downside objective. Your next one sitting right here, which we're in already. Gold. If that comes down into here, look for up here. If you get below that, look for down here. 290. I'll put these on here so you guys can see them. Volume imbalance in Disney, and we're still looking for more downside. That objectives we're looking for down here. Oh, come on, don't fiddle around. Let's go. Take off, man. Let's get over here and see what we can find. So far, bodies are still respecting this. A little clustery, a little equal highs above us. I'd like to see us get above that, find some support at those, and then go higher. We're back into this guy right there. The fact that we've wicked through that already, I don't like it. We have got into this, a fill of this busy. Usually you'd want to see that stay open to some degree, so all this is just sloppy price action for me. It's not clean enough. You're right into the mean threshold of this candle even, see? So wait for one of those market structure shifts above and below. Could ES get to 55.19? Yes. Could ES get to 55.19? You've got to get below 55.59. Derek on a close. And then I'd say you got more downside. What are we looking for hourly? Nothing immediate February. What about daily side? 55.19. You're looking for consequent encroachment of the daily imbalance. Yeah, that could definitely be your downside objective for the day. Just hitting that. and watch for some sort of reaction off there. If it continues to drive through, then look for the fulfill of that. So I'd be looking for 55.11. 11. Scottish. 55.11. There, you broke the upper part now. Now I want to see this come back down into here. Find support off the hourly. Get back into this range. So the bodies respect that. Wicks do a lot of damage here. We get above the premium level and these old highs here. So you want to see it come down and just tap the old highs. So this, you want to see it turn into a adivse here. And the very next candle in the next 10 seconds, you want to see it come back down, give this a kiss, and leave this portion open. And if it doesn't, that's good. It's very bullish, but it's bullish without me in it. Actually caught the top of this imbalance right here. So this imbalance, this high here, traded above it, tapped the very last high candle, and then left, looking for this little guy right here. First presentation, back into the New York open range, the midnight open range. We have midnight open, and we have our level we're looking for here. We're looking at first fair value gap right here. We're looking at the midnight open first fair value gap. We're looking at 4 a.m. candle. Look at all that in here, and looking at today's 8:30. All of those objectives are all overlapping right there on a 1 minute chart. So let's see if we can get back down into this level right here. This is a 55 candle, so it's a TIBS. Did it give us that low? What's the high in that candle? 3695. Low. 373. It's not there yet. March right here. So now we've got a small little imbalance. Highs are taken. So while you're looking for this to return to here, you're going, okay, I've got this reversal that's happened right here. Now I'm looking for a deeper run back into here. I'll be looking for something a little deeper than this now. Looking for 50% of this range. So I'm looking for this to come back into, at least give me this here for a discount if I want to go higher. %of that wick or that BISI here is consequent encroachment, which is what we're hitting off of now. Be nice to see it leave from here. But if you want a discount, buy it at a discount down here. If it trades through that level, you're out long before it ever takes your stop loss. Oh, there's a little guy right there. I didn't see that guy. That'd be the discount inside here. So as soon as it hits that 50%, I'm going to go long there. Not a very clean, it's not a super clean, but I'm going to go with a long if it hits the 50%. Just hit that discount box right there. Or that premium level we went through to come back, find support at it to go higher. That's done right there. I wanted it to come down just a tad bit lower. So you could do this, put a little right on that level. Put a, oh, it's already there now. I'm going to go there. So I do not want to see it get back below that level. So I'm going to sit around. I have to be back here. I do not want to see it get below here, but ideally I don't want to see a body break below here. That's 50% right there. Let's tap that, filled that. So now you want to see it react off of here and go higher. If I see a wick get through there, I'm out. I'm out. Look for down here now. So my stop loss was sitting down here. As soon as it took a wick through there, stick to your rules, man. Stick to your rules. It's coming lower. And I know you wait for the body to close there, but I don't even want to see a wick click through that. As soon as it clicks through it, nope, that's not as clean as you would like to see. Because usually you see it just tap it and then go. That's what you want to see. So watch right here. If we get through this level on the close, then this whole going higher stuff, not in the cards. We got an overall daily bias lower anyway. Let's think about how much that would have been a much bigger loss there versus tap it. Nope, I'm out. Follow a rule. That rule is awesome. That just saved me $400, $500, $600 loss right there because that one little rule that you establish. So now we're below that level. Range extension now. Look for a run below here. That one's lower. This is an immediate rebalance. We're just tapping into that now. Right there. That's the very bottom of that whole range. Oh, literally look at that. We closed. Yeah, I think we closed below it. We closed below it, then extended all the way down to the discount box. And now we're running all the way back up to the premium box. So that would have taken my stop loss anyway. Had I put my stop loss below the low, it would have been a heck of a squeeze, and then we'd be in profit again now. But who cares? Didn't act the way I wanted to act, so we move to the sidelines. Here's your premium level up here. Discipline, stay disciplined on your entry. Let me get rid of this one out of the way. You've got this one here, this one here, you got this one here. That's all part of the premium portion of that smaller range. Here's the discount. Now there's the long into this range here, and we're compressing. So let me get out of that guy. Here and here. Now you want to see that go higher from here? I'm looking for that premium box above you. if we get back through this level for these equal lows below you. So you say to yourself, well, if you're going to take a trade here, how do you know which one to take? First of all, ask yourself, have we taken a low? No, we haven't. And we have a little change in direction here. So we should be looking for a run back inside this internal range here. If I trade below that on a close, then it's coming down here to finish off the job of extending this range, this larger range here, a little deeper. And then if we take out this one, we're looking to extend the larger range even deeper still. So watch that level right there and watch the wick. You say right there, I don't want to see another little pokey poke through that at all. That's it. I want to see it. Tap that and go. That's what you want to demand of price action. So watch it and develop rules around precision. Right now, all that self-talk about, should I let it just go a little bit further? If I drag my stop loss down, it's saying, yeah, drop it down there so I can smash into it sooner or a little later. I'm going to drive all your money down away from you. Follow your rule right there. Enter. That is my exit. If I see it so much as tap below that, I'm out. So we're going to pretend there's a trade right there we just took. Okay. As soon as it taps below it, that's your loss, not your loss down here. Because that's my rule. And watch, if it gets to this rejection block right here, this little swing point, you could pay yourself right there in a small little run. Is that worth it for you to enter in here and get 50 handles out of that? Maybe. To this one here would have been like 30 handles. There's 50, 20, and there's 50. So 30 handles quickly in 1 minute. Move to break even, pay yourself, or just move to break even and monitor from the back end. So see how it hit it? That's that rule I was telling you about. That's the discipline. Hit it, and if it's so much as taps below it, I'm out. And look at it, hit it, nailed it perfectly, and left. That's what you demand of your price. And as soon as it hits your rejection block, you're into break even. Zero stress trade now. That's how quickly you can go into zero stress. And now wait for it to hit that box. Hits that box, pay yourself. Leave a small little portion on to see if it continues higher. Internal range liquidity hunt. That right there is the example of what I was saying over here. If it even so much as wicks below that, I'm out of it. Even so much as wicks below it, I'm out of it. Look at it, come back down and said, yeah, I'm tempting you to give up. That's the rule. That's the rule. Ones and zeros, buddy. Right now, and you're stress-free. Abs, you're looking at that, you're just going, ugh. Look at that. I just rode that all the way to the top of the tram, just nice and breathe easy. You got stress-free. That's the level. Even if it's so much as tapped you, you know you're going to lose a couple of bucks out of that because you'll be like, I'm out, right? Your stop loss is sitting down in case of dramatic run on you. But otherwise, that is what we're calling for precision. Look at that. We traded above it. What did we say? Comes back into it. Load another one on. Look for a range extension now. Range extension completed. Done. Look for the next level up there. Done. And we got perfect entry right there and demanded price give us what we want. And it gave you what you want. It gave you more of what you wanted, gave you more of what you wanted, and gave you more of what you wanted. Does that make sense to you guys? That's disciplined trading. And stress-free. See how quickly you can get to stress-free? That's demanding what you want from the market, my friends. That's demanding what you want. And that right there was picture perfect entry, run above, come back, give it a tap, and continue to extend the range. That is what we do every morning. Box to box, box to box, then through it, and then the next box. And that's the exact thing I've been showing you forever now is as soon as it trades through that premium box, comes back in and gives it a little kiss, takes it straight up, that's clean price action. We want to see range extension it does it. And then drives, where's my next upside objective? Right there. It hits it. Body hits it right on the perfect, right on the money. You pay yourself at that one. And then you see it does not get a body above it. It literally closes on it, a couple of wicks up in there, right into that opening range fair value gap for the night. Look at that, taps it perfectly, and then starts to come back through. Now we're sitting right here between that candle's high here. See how the bodies are respecting it? This is clean price action now. That's it. And then you find that you're way less stressed because that's what you want. And then you just go, I'm just going to wait till like something new comes along. I'll wait for my next setup because, you know, if you're worried about setups and getting lost and fear of missing out, I think we mentioned that somewhere along in here is about fear of missing out. Who cares? We found there's multiple setups we've given you just in here alone. And this was a perfect one right there. Perfect, another perfect exit, another perfect entrance. If you want to say, okay, I got out at that level. If I trade above it, good. If I trade back into that, I'm going to buy that long. So you literally got out there and in there to go long. It just said to you, oh, I'm going to go long. You sure you want to get back on? Sure, stop the bus. Let me come running back, pick you up, and we'll take you for the long. Pay yourself there, move to break even and say, oh, are we reaching for the next one? Yep, we hit it. Good, I'm getting out there, and if I get out and it trades below me, then I'm going to be glad I got out. It did not get a body back through there. Oh, maybe it did. Yes, it did. Body's back through it. You say, ooh, if it comes back to this old high, there's a great opportunity to get long again. Remember, it's the same structure break we talked about before. Break the high, come back, find support at it, go long. Comes back, finds support at it, goes long. Reach for an old high, takes out this little order block here. We want to see a body get above here. If it doesn't get a body above there, I'm looking for the first opportunity to see a reversal. And this doesn't feel like it's going to reverse right now. It feels like it just wants to go higher. So what's this mean threshold of this candle? You demand that mean threshold happens to be the opening price midnight candle. I want to see that whole price, and it happens to be the consequent encroachment of this this inversion here. I don't want to see it getting any lower than that. If it taps below it, I'm out. So you wait and see right there. If it gets below that midnight open candle, if you wanted to go long, you can get out and wait for something cleaner. Demand that of the price. Now, I'm not saying you have to follow that rule, but my point is, if that's your rule right there, that's where you're getting out. If it actually touches that and starts to go below it on that opening, I'm on the wrong side of it, I'm out. Otherwise, that's still long. Now, it could just go tap below it, take you out, and then go higher. And you say, okay, do I need to modify those rules? Does that prove that over and over again that mean threshold plus a tick or two always gets taken out? So do I need to modify my rule on that candle to here? See how it literally came down just before it? And now look, we've just extended that range. You pay yourself right there, the next high. And you're out of the trade. Or you wait for the next premium array, which is right here. See how clean this stuff is? It's nice, clean price action right now. This is what you should be demanding of your price action. Look at that. Make that a little bit clearer so you guys can see it. Look at that right in there. Nails the next. Look at all this right from here. Premium array, premium array, premium array, premium array, range extension, premium array, come back, tap the old high, range extension, premium array, waiting for the same kind of thing. So looking at this order block, that order block, tap it and go higher. And where am I aiming for next? Up here at 50-50 to 50-60. Does this make sense to you guys? So we're just trying to cater. I'm trying to, the whole point of today was just trying to get you through that. You can watch price action, and when it's acting cleanly, you have a set of rules you follow, and you're disciplined with those rules. See how we just tapped that level we looked for? Now I want to see it tap it and leave. Get out of dodge. And we want to see it get it back above this level, not just wick into the high of it. Because if we create another, see this little imbalance we got here, this little bissy? Always keep your eye on these bissies. Right there, we've come back, we filled it perfectly right there. That's it. I don't want to see it get below here. That's also 50% of this candle. Start moving higher. So if you're off that candle there, that's it. I don't want to see more than 50% of that give way, or I'm on the wrong side of it. I do not want to see it close below there for sure. So watch the next 20 seconds. I don't even like the fact that we've wicked through that already. That wick through, I don't like that. But it's back inside that midnight open fair value gap right to the very tip of it. See that? Overlapping arrays. Now you want to see it run right through here. Did not get a body close below there. And just keep pushing higher. Get through this next premium level. And then find some support above that. And then push for the next premium level. Until proven otherwise, you're going higher. Regardless of the carat there on the daily is down lower. Right now we're in a 1 minute chart. It's telling us we're going higher. Are we worried about SMT divergences? Are we worried about freaking fundamentals? Are we worried about anything else? No, we're just staying in price action on a 1 minute chart. That's all we're doing. Done. No wiggle room. That's your rule. Out. You made a little bit of profit on that. You're out. Wait. If it's just coming back to tap this level, you don't want to see it break through there, and I don't want to see a body get back through there. Just the fact that it came back in here one more time. Remember I said I didn't like the wick? But that's it. You're out. Or I'm out. You're playing this reinforcement game right now in your head. You're finding ways to reinstill in your head. I'm glad I saw that. Yes, I'm sticking with that. Instincts tell me I don't like that little wick below there. Good rule. Good rule. If it takes off, I don't care. Good rule. Came back, revisited it, don't like it. It's not clean for me. I'll wait till I find markets that act the way I want them to act. I'm not going to participate in this because it's just going to beat me up in here if I'm not careful. So I've caught some beautiful runs on the way up. Massive, massive ideal precision. Celebrate that. Get like, wow, yes. Get up, pound your chest, stand up. Yes, yes. I saw some amazing accuracy there. It followed the rules perfectly. That's it. Celebrate it, man. Went long on oil. Ooh, didn't we say it was going down to 65 bucks or something, Craig? Oh, it did get 65 bucks. Well, there you go. Look at that, 65.30. There's your entry. Went long. You went long on here and got stopped out. Mean threshold of that candle. That's that line in the sand. As soon as you get a body above it, right? As soon as you get a body above that, the line in the sand is that mean threshold right there. And literally the bodies are right on it. That's a 1 hour chart, a 1 minute chart. Where did you go? Where did you go long, Craig? If you see this low get taken and you look for the first inversion, which is right here, see it right there, body trades above it, you come back inside it, bodies stick around there. You want to see, you do not want to see a body get below here. Trades higher, takes the high out, pay yourself. Look for the next premium array. Here's up here. There. Draw it across. You nailed it. So you've got your discount to premium, pay yourself, move to the sidelines. If it comes back against you, or you've paid a portion, or you pulled your fib tool from low to high, whatever method you want to use. There's 70%, so you would have got to 60 or 50%. Pay yourself, 62%, pay yourself. Hit 70%, pay yourself, move to 62. It opened on 70, came back and tapped you out. So you would have made money using the fib tool method, and you would have made money on the box-to-box trading. You would not, you'd still be in this if you were looking for a reversal. So if you're looking for a reversal to reversal, here the reversal sitting right here. So you get a body below that and literally closed on it. So you're still in that long if you're using box to box or a reverse to reverse. The reverse to reverse can keep you in trades a little longer than box to box and keep you in longer than the fib tool. So 3 methods, same kind of thing. Every morning we showed you this right here. If that's your rule that says, I do not want to see even so much as a wick get below here, then you would have been out of that trade and it would have turned against you and you would have gone, do I need to modify this rule? If I'm inside a BISI already, I will allow it to come back and fill that whole level and the lowest down body candle. I allow the open, not even the mean threshold or the mean threshold only. If it's the last candle that makes that BISI, then use its mean threshold as 1 tick below that and you're out. That may be your rule around that candle coming back down and violating this level with a wick. You got to have a rule for that. So if we trade below that level, the fact that you're wicking below it now, again, your decision on your rule. If your rule is a body needs to close below there, look at the range you're in right here. You just hit 50%. Now you're definitely below it. You're out now. So whatever entrance you had back here, you just unloaded it right here. As soon as it came back down, took out that low, you're out. You made a small profit versus box to box would have made you more and the fib would have made you more. If you're just using the reversal rule, you're out of it. You close below it here, you're out. Then you would have made a small profit. All 3 of those methods would have made you money. But this one you have to be quick. Otherwise it's just come back and you're underwater again though. So they all have their pros and cons. But hopefully you can see the benefits of 3 different ways to manage that. Tight stops, I won't run, so probably lower, 66, 64. I use tight stops on crude to lock in green. It does not run, they stop me out. That's the way to do it, man. Now wait for new swing lows in crude. Morning, Pablo. Didn't hit that, stayed on that one. See if that holds price and goes higher. And what you got above you right here. If we get through that one, then you got this rebalancing of this candle back to the previous candle's high. Ideally, you want to see that stay open, tap it, start pushing higher. If it rolls through it, then I want to see it get below these candles again. There's nothing in here unless it's a lower time frame discount or raise. On a 15-minute, that's all I can see on a 15-minute for that to keep going higher. ICAD, it's getting cheap again. Earnings this Thursday. When you're bored, would you look at it, please? ICAD? What is ICAD? Gold on a 5-minute. We've traded through it. You want to come back into it now, and you're coming down to this little level right here. Then you're looking for that sky. Get through here, look for them, take through there, break for this guy down here. Those are the layered levels I'll be looking for. If we can get through each one of those. Or if we get back through here, look for support here, and then run above these equal highs. Disney's deep into the volume imbalance, that little gap we're looking for down here. UNG. These guys are really trying to drop now. What's our Canadian bank friends up to? Rolling over, rolling. All coming down. Welcome into March. March Madness to the end of the month. March Madness, 27th. Did I say the 27th? Who said the 27th? Look at this upside, you guys. Look at this upside. Sorry. Where did you want me to go over here? I can move some of these things out of the way. Bank shares. Let's get rid of this guy. What one did you want me to look at? You wanted me to look at ICAD or something like that? Let's look at ICAD. ICAD. This one here. Earnings this week, low crude oil. ICAD, it is ICAD. All right. ICAD. Here's your ICAD. Yeah. Bottom of the hour. 11:30. Okay, so I'm looking for downside in here. Looking for that 192 to 197. If you close below that, well, I guess we can do this. Let's incorporate both of them. If you take out this on the downside, Look for this range extension. All pool of liquidity sitting down in here. Look at how this acted. That's why I want you guys to see this is same stuff happening over and over again in all these markets. This is the reversal. This is an immediate rebalance. So if you're savvy enough to see this, you see an immediate rebalance. If not, no big deal. Wait for this fair value gap here. As soon as a body trades above it, look at this as a level of support. Body closes or opens above it right here. All this, you trade right back to a perfect entry. You run back up, takes out the high, move to break even, you're stress free. You're running all the way back up into premium inside this range. You're 62% plus. Pay yourself on the way up. If it comes back and takes you out, no big deal. You got a reverse here. The body trades below it right here. Closes, comes back in, finds support. Now you're heading back to this discount box, box to box. Comes all the way back down. You sell out your trade here, and you wait to see if that provides support. It does, trades back up again, above it again. You say, great, now I can continue going higher. If it takes out this on a close, I will take that as support to run higher. Look at that, closes above it, opens on it, closes on it, and goes higher. Takes out that high, pay yourself. You see a small little reversal here, trades below it. You don't get a chance to get in on it. It comes back down into discount box. It's a discount box one more time. Does not get a trade below this level. And consequently, you go much higher. ICAD, some damn company, I have no idea what it is. Is there an algorithm running the market? Is this shit doing the same thing that we're looking at on a 1 minute chart in NASDAQ? Is it doing it here on a daily? Absolutely. So anyway, that's what I've got for downside for that, Craig. And it's simple. I didn't talk about fundamentals. I didn't talk about SMTs. I didn't talk about any of that other stuff. It's the same damn thing I show you every morning. That's all we care about. We find the key levels that provide us support. We mark them out on the chart. And look at how that level, opening range, tell me that opening range is not a, look at that first fair value gap. Tell me this is not data points the algorithm's reaching for. Crazy, crazy, crazy. I just took a trade on NASDAQ with an order block from 1041 entry to 1049. I took a take profit at 1053, reaching to inverted gap on the 1 minute, 1006. Did you make money? Good for you, Pablo. Mr. Escobar, good for you. It's a rocket up and down. Fun run when you catch it. Literally closed on it, gapped into it, gapped down here, ran higher, took out the high, premium array, hit this premium array here, and you're looking for the next premium array above you here, and then up here. So this one, hit that one there, and then you've got a reversal here, watch it tap here, and then look at this one here. Tippy tappy, and now look for all the way down here, unless of course we get back above that level right here. Watch from that candle's low to that candle's high. There's a little imbalance there, so you have to incorporate the whole thing. Tap it. You want to see it come down all the way down to the discount box now. Chop, chop, chop. Don't play in this market, man. If you make some money today, move to the sidelines and wait. Because tomorrow, I think tomorrow is CPI numbers, isn't it? So you're looking for a good bashing tomorrow if you're not trying to catch CPI. Thanks for iCAD. It's a watch Thursday and Friday. Yes, indeed. That would be that's a penny stock. But if you can get back into this little box down here, ooh, you have one more little level. I'm looking at down here at 140. We'll see how they act in there. And all you got to do is, because these candles don't move a hell of a lot, you wait for that a low to get taken, a market structure shift, a SIBI to form, trade back through the SIBI, come back into it, catch your long there, and take 15, 16 cents for 10% return on your money. Are you happy with 10%? If you're Gretchen and you want more, pull your fib tool. Once you're in, pull your fib tool, and as soon as you break the first little order block high or immediate swing high, move yourself to break even, or pull your fib tool on there, or do box to box, or do reverse to reverse. That's how I would trade iCAD. Choppy, choppy. If you're still pulling the trigger inside here, you're probably feeling a level of frustration right now. And all that's going to do is reinforce a negative belief that you have on yourself. How are your emotions right now? Are you sitting on top of that mountain, kind of just enjoying the scenery? Just taking some deep breaths, remembering that the coolness of the snow, the rocks underneath your butt, just sitting on that cool rock, getting piles, looking at people going by, overlooking this beautiful, beautiful scenery, nice breeze, nice warm sunshine, and you're chilling, man. You're waiting for your setup. There's nothing in here to trade. So there's no reason to be emotional or upset about this. You just wait. This is all chop, chop. So go hunting for something else. Go to a different savanna. Look for a cleaner setup somewhere. If it's all chop, chop, stay out of it. A little cleaner by the looks of it. Dow Jones. Mr. Jones. Mr. Jones. We have a return to order block, break market structure to the upside, come back, find support at it. We didn't get it here, but we have it here now. We want to see it stay above this level. Mean threshold, it's hit. Get up above here. Get on top of these levels. Then look for higher prices. Looking for your premium level right up here. First little objective to reach for. That's the breaker that you come back and reclaim. You ran through the breaker, you came back, you reclaimed the breaker. Remember I was telling you about the mean threshold as your line in the sand? Look at that. Right there. Mean threshold, line in the sand, and away you go. Comes back inside this fair value gap, fills it, and now you're back above this one. Come back and tap it. Keep pushing for this high and this high. Let's go. Don't chase price now. If you haven't got in, don't chase it. Just wait. This is why it's stress-free, man. This is why you just sit there and go, that's what I'm looking for. That's what we look for every morning. That's my setup. Here I get stress-free. I pay myself here. I'm stress-free. I'm watching the elevator take me straight up, and I'm just breathing. I'm not getting excited. I'm not looking at this dollar signs over here. I'm just looking for my goal, looking for an objective, and I'm now establishing what level is going to be my fail-safe. What do I want to see? What do I not want to see it do? I do not want to see it get below that candle right there. I do not want to see it get below that one tick below there. So I want to see it come back, find support off the top of this. I want to see this portion stay open. I lose my love for it the more it starts to eat into this candle. So where's my stop loss? Is it still down here? Hell no, I'm up underneath here right now. And I want to see that. So now what you want from the market, let's see if we get what we want. I want to see this fair value gap stay open, and I want to see from there to there stay open and no more than 50%. And look at that. Strangely enough, it gives us consequent encroachment would give us this spot right here. That old high. Wouldn't that be lovely? So we're anticipating 2 candles ahead of us now. The next candle come down, give us our tap of this consequent encroachment, and then aim for my upside objective. There's my fair value gap. Geez, did we not see that coming? Now let's look for a retracement back into here. Before it takes out these highs, I don't want to see the highs get taken just yet. Because don't forget, they're always an objective. Anytime a high is there, take it, pay yourself. We may not reach this, so always have a contingency plan to pay yourself. There's nothing worse than having a payday. You just say, no, keep your check. You can pay me next week. And it comes back against you. Take the money when it's available. Right there. Come back, give this a little kiss. We have not broken that high yet. Come back, give this a kiss, and give us a little smoochie right here at the consequent encroachment. Remember what Michael was saying. It loses its strength for me. Michael says, consequent encroachment. If it comes down just before the consequent encroachment, doesn't quite tap it, and leaves, that's even better. Or at 75% of the fill of the BISI, but doesn't fill it completely, bullish. Now you can grade your response into this. I'd like to see 100% would be like to see this, tap this institutional order flow entry drill and leave. Super strong for me. I like that. Very happy with that. The next one is consequent encroachment. I'm happy with that. I'm not so happy with this, but I'll take it. It's 75%, and I'm really not happy with the full fill of that right now. It's not so bullish for me anymore if I come back and fill that whole BISI. Waiting for these highs to get taken. Important data point. Ting, ting. We've bounced off it twice. 1, 2, 3, 4, 5 times now. Fit this level. Ting, ting. Come back, give it an institutional order flow entry deal right there. Ooh. Is that a down candle? It is. Come on down. Come on down. Looky, looky. Now, anytime now, you can leave the moment you give that a little tap. Watch it. Right. Come on, don't tease us now. That's probably like a half a handle away from that. What's the low on that candle? 635. What's the low on this candle? 632. So 3 handles. You got to keep coming down. That's the institutional order flow entry trail. But I want to see this 50%. Cut right there. Let's go long there. That's it. And I don't want to see, now I don't want to see get below here. If I can get back above this candle here now, find support above that. And I want to see it really starting to move here. So watch how it's acting. I want to see it really start to move above that now. I do not want to see it fill. Stand by. Somebody at my door. Can you come back in a little bit?
Okay.
Thanks. It's coming back and it's filling this thing. I'm losing my love for this. Not quite full yet. That'd be the perfect place to stop. Give me bullishness here. Act the way I want you to act. Go, go, go. So now my stop loss moves to the bottom there because I don't want to see that come back and tap it again. If it taps me out, I'm out. Far less than I was going to take because this is a discount box here. The fact that we're revisiting that again already, it's already going to take me out. You want to see that leave, and as soon as it gets back over that candle, you want to see it start to go higher. I don't want to see it come back and tap that, so look at this discount box here now. Back to this candle's high. It can still go higher. It can still go higher now. I don't like that double wick. And I hope it does. So I want you to kind of ask yourself right now is what would you be thinking with that rule I just had about I don't want to see it get back below here now. Because it's still above here. So I could have put to tweak my trailing stop loss too quickly to be careful. Keep your rule is right there. Now if it goes higher, that's the question you want to ask yourself. What's going through your head right now? Did I screw that up? Did I pull my stop loss too quickly? Did I not should I allow myself 2, 3, 4 wicks? How many wicks would I allow myself? Write those questions down and say to yourself, what makes sense? What are some things I want to look for these retracements? Do I need to back test this? Look for any breaks above where you get a fair value gap and a retracement back down. How many times does it retap that 75%? And does it tap it multiple times before it goes higher? Do I need to develop a rule around that? Does that make sense to you? Absolutely, abs. Stick to your rules. So I didn't like that second wick down, and I pulled my stop loss still a little too tight. I should have left it just below there because that's the rule. If it breaks more than if it totally fills it in, I lose my love for it completely. So I gave you the 3 places it could do it, up to 75% fill of that thing without fully filling it, and then you just get just underneath there. Bodies respect 75 or 50%. So that would still be a valid trade if I was just slightly longer stuck to that original one here and not this double wick thing. That's okay. Now we're above here. I can get long on that again from here. Come on. Don't give me a 10-minute reply. Check my paper trade. Get out of it. Log out. Log back in. Connect. Gave you my entry. So I don't want to see it get back below here now. So my stop loss will go down here. And profits in here. Again, paper trade out. So shit, doing this way. Now we'll see what we get here. Again, I do not want to see a trade below that level on a close right there. This is the last candle, so you have to use that wick and the open and the mean threshold. So I have to be just below there. You'll see that climb up to that premium array now. As soon as it breaks that high, move your stop loss into break even and make it a stress-free trade. See this revisiting thing? Don't like to see that. So you want to see it tap that and leave, not this revisiting stuff. So right down to that wick, that's probably going to tap me out. It's probably already tapped me out. No. This is bullshit, this fucking paper book crap here. That's not the way to trade. It's just watching stupid paper trades coming back and forth like this. What have we got for losses today? And what have we got for gains? So 11, 11, 11, right there. 7,000, 12, 13, 14, 14 down, 5, 6. So half down. So we're going to turn this around. We're getting into that lunch hour. I hate lunch hours. This is where the sucker comes back in. Let's see if we can get above here now. So I think that's 2 out of those 4 trades there. But the stop loss was really tight. And I got clipped. And so far we still have not broken Now, typically you want to see this hit here and leave, not come back, revisit it, not coming back and do all this constant tap, tap, tap. You want to see that with a sense of urgency. Hit it and go. Like here, you see how this came into this consequent encroachment of that gap? Hit it and leave. That's what you want to see, hit it and leave. And it didn't. It just hit the mean threshold of this candle and then rolled over, created this little gap, traded through it, back inside it, and now we're banging around between this little inversion right here and we're inside this higher fair value gap still, which is reclaiming it multiple times. So you can see how it's just that mean threshold held price, banged off that, created that change in direction, and now we're back just inside this small range. So we could be coming all the way back to this little discount guy right here, or that order block there. It's a very small, tight little range. So don't trade it because you have nothing. It's not a clean entry, so wait. There's a full fill now, right there. Here's the discount array right there, and then the discount box is right here for box-to-box trading. That's just trying to stay on the horse right now. Wait for a clean setup now. Discount. Now you see the wick getting through there already. Right to the bottom of this. Busy. We tapped it. See if we close below here, extend the range. Tap it. Keep coming lower. I'm going to go with a short there. Like that, tap that. Looking for a range extension. Stop loss will go just back above that level right there. Now it could re-tap here, but I want to see this range extend here now that we've dropped below it, tapped it. I don't want to see it get above here. We go above here, I'm on the wrong side of that again. As soon as it takes a low, that's where you typically pay yourself. Let's take out the low. Pay yourself there. And now that's the range extension. You pay yourself there. We're just going to nibble back whatever we lost there. Just do it very meticulously. Now you want to see this close below this level right there, and come back and just give it a little tap right there. And I want to see it keep coming lower. Take out this low, and then eventually start reaching into this. We're right back in this order block now. This breaker right here. So again, stop loss has to go above here. And just be just above there. We can dip into this level right here. We've just tapped it here, so I want to see this with some sense of urgency here. You want to see that keep coming lower now. Always keeping in mind that as soon as we take out a low, if we get an imbalance right there, we've got to change in direction. We could be coming back deeper into that range now. If I get through here, I'm on the wrong side of it. I want to see it get back through this little imbalance right here. If I close above that, then we're coming deeper into this range. I want to see it just tap this here, roll over, and come back down and get below here. Now my stop loss, I don't want to see it get back above there again now. Now we're taking through this here. I don't want to see us get back above there. You've done your thing, you've come back and tapped this order block. Let's see you continue to extend now. If we can get the next range extension, I'd like to see our next point price leg. That puts us right inside our box. So it's come back and it's tapped that little level again. We've traded through it, we've tapped it. Now you want to see it continue coming through here. You don't want to see it keep running higher again now. So that's the price action we're looking for. Let's see if we get that. But anything other than that is not what we want. You'll be prepared to close your trade. Pay yourself. There, see how fast that moved back away from us? You might have to sometimes put your limit order in there. If it comes back and takes us out now, you might want to put a limit order at your next low to pay yourself. We're going to let that sit there. I like the idea of this being the next price leg down. I've got nothing in here right now that tells me that's going higher. So I'm still going to wait for that to come lower. Now there's that little imbalance there again. Keep that in mind. And we're dealing with lunch hour here, so I can get my ass handed to me real quick. I don't want to see this mean threshold get hit. I want to see that little level right there give way. And this would be the premium array inside this small range. We'll make this a stress-free trade now. So as soon as it hits this objective right here, our take profit will be right here. Actually, I like that. Consequent approachment of that. Move yourself in a bit more. And let it ride now. It's stress-free, man. It's stress-free. If you could pay yourself there, pay yourself right there. And I'm going to move to here. Discount box is hit. What the hell? Let's take our money. One of your rules, pay yourself. If you got one handle and you're in the hole already, pay yourself. That just reverses on you now, comes back up higher. Be glad you paid yourself. You're in a discount right now, so see what I mean by how you must demand from price action what you want it to do. And we kind of just talked ourselves into it. It has to see there, that has to hold, that has to hold. And we hit the box, your trade's over. And be happy with that, because if you see these big long ones, you think, oh, I could still keep squeezing juice. No, rule is hits it, pay yourself. You only got one on, you're down a bit. Make your money back while you can. Otherwise, you're going to give up a lot of profit now for this to come back to an area you say, oh, no, I don't want to see it get above that level. And if it does, you think, I could have paid myself there. Well, then pay yourself there. So watch this level right here. Now, if it makes its way down into these levels here, I don't care. You paid yourself. That's all that matters. That's what it did here, is it dropped below this low here with the body of the candle. And look what this came back to. Just and done. Look at that. Nice tap of this low. Looking through to this discount box down here, the lowest one. Has any of this been super stressful for you guys? Have you been, if you are, screen capture that point on your screen and write in your journal, I would have been stressed at this point. There's a specific level that you need to be able to look for price action to hit it and act off of it accordingly, the way you want it. And if you don't understand how to make that or those demands on price, then study price action closer and you'll get it. It'll be there for you. Is there really only 14 people in here right now? Oh, 34 people in here. I was wondering, my chart shows there's only 14 people in there. Anybody have any questions on this so far? Has this made sense to you in terms of what you should demand out of price action, the levels you should demand price to? Like, do you have any questions about the specific levels I was calling for? Anything with that? Did it not make sense to you? Did the narratives, I try to talk through it like I was talking to Abs yesterday, talk through it like you're a paramedic student. Tell me exactly what you're looking at. Tell me exactly what you want price to do and where you want it to go, what you're willing for it to give up in terms, this is obviously trader I'm talking about here, but as a paramedic student, I used to get my students to tell me exactly what you're looking at. Look at this person. So, hi, my name's Darren, and I'm a paramedic student, and I'm just going to do an assessment. I'm going to do it verbally so that my preceptor knows exactly what it is I'm thinking at the time. And the patients go, oh, great. Yeah, no worries. So I'm just checking your breathing right now. What's your rate, rhythm, and quality? Looks pretty good. Okay, I'll notice the skin condition, color, temperature. Looking for signs for trauma. I don't see any trauma out of the face. Do you have any? Have you fallen, sir? Have you hit yourself anywhere? Blah, blah, blah. Then I know exactly what my student's thinking. They're thinking out loud, and they're following a nice logical approach. That's what I try to give you guys this morning, a nice logical approach. This is what I'm thinking. This is the candle I'm looking for support off of. So I just verbalize what goes through my head when I'm looking at these charts. And when you get into that stress-free thing, then you go, what is my objective? My trade's not over. Even though it's stress-free right now, it's not over yet. How do I get the maximum out of this trade that I can? And I'm trying to anticipate what it would be like from a person who is a little more stressed out about trading and they're feeling their guts knotting up on them every time they're entering into a trade. I'm trying to think about it from that perspective, that kind of student, and how you can mitigate some of that stress, get stress-free, pay yourself. If you've gone in the hole a little bit, how you get yourself back out of the hole in the logic and trust your candles, trust your setups. There's that level right there. Bang, hit it. Now we're trading through it. Now we're looking for range extension, right? That discount box down there, finally hit it, closing through it. Now before the range extends, you want to see it close there, come back, find some support anywhere inside this box here, and go lower. There, see how it tapped below it? Right there. And this is lunch hour. Even though you're calling it, I'm calling it, I'm not going to trade it now. I'm going to leave it. Ugh. Now, 12 o'clock typically takes out the lunchtime or the market's the morning low. And then you want to look for a nice clean reversal to see if we get higher. Remember what's our downside objective for the day? Where's our carrot? Oh, where this is, why are we on Dow Jones? We trading Dow Jones? We were trading Dow Jones. Oh my goodness. There you go. We made some money in Dow Jones. I thought we were on NASDAQ still. Well, just shows you can still trade at any one of them. Breaker, trade below the breaker. reclaim the breaker, and go lower. Oh, a lot more chop here, eh? Versus a little more cleaner. Look at the wicks in that. I didn't even know we were trading Dow Jones. All right. I think this is going to be it for me this morning. Abs and I are going to meet up lunch and have some talk about some trades, talk about some trade setups, review some charts, and that's what I'm here for. Answer any questions. If I come visit you got questions, you want stuff you want to try out. There's a couple of extra little treats I give people when I'm visiting them. The stuff I don't share on here that I like to share with people as I visit them. So I'll be sharing that with him today. Looking for oil. Breaker. Takes out the highs. Trades back into it. Order block. Trade below this low. Finally get a body below the low. Here. Trade back into it here. Short. Looking for range extension. Trade to the bottom of that. Trade through it. Come back into it. Find support. And look for a run below these lows. And back into these equal lows below you here. Appreciate you too, Dal. Thanks, man. I appreciate all of you guys popping in. This really helps. Thanks so much. Got to go. Appreciate this so much. You're very welcome, Shepard. Well done. Nice trades. AKZ. Thank you, sir. Let's look at Bitcoin. It's already from premium to discount, all in the same box, all in the same range, in the same candle, the 1 hour. Remember, we want to see this level hold price. It's just coming back and it's just banging around on there right now. And then we're looking for this candle above us. We wanted to see this stay open. It did. And now we've got to the consequent encroachment of it right there. Now you want to see that hold price and start going higher. I didn't want to see this close any lower than this consequent encroachment of this candle we had here. But if you take the consequent encroachment of the BISI we're calling for, and you see it disconnecting and reconnecting with you guys over there. Sorry about that. That's what you got to get put up with for hotel internet. Gold. That really has a nice little reversal in gold and capture a nice cam model entry there. Holy smokes, look at that. You guys see this delicious cam model entry? If you're a cam model trader right now, oops, look at this. Cam model entry. We've got a consolidation right here and a consolidation right here. We have a displacement candle. That's what you look for in cam models. And then the moment you return to the high, so cam model 1 and cam model 2. Cam model 1 is when you trace up, come down, hit the high, all the way down to the bodies. I consider that a cam 1 model entry. A cam 2 model was 50% of the whole range, which was sitting right in here. So you have a cam 1, travels higher. We have another displacement above consolidation. Cam 1, right back into the bodies, continues higher. consolidation, trades above, comes back down, cam 2, that's a cam 2 entry for continuation. So nice little cam model runs here, back up into the mean threshold of the up close candle, new day opening gaps, if you're aiming for those, equal highs, that's your upside objective for the day, and this new week open gap sitting above you for gold. Disney, what are you up to? What are you up to? Nothing there. UNG, let's go. ICAD, is ICAD coming down? We're looking for ICAD. I'm going to keep that on there for a bit, Craig, because this could be, how long has this stock been around for? Oh, it's got a bit of history for it. They so bootylicious. The weekly's on fire. How's that? We said 170. I was looking for 140, 142, something like that. The weekly's on fire. And then he says, oh my goodness, here they go. Hello. I'm just doing a show on the, if you need to, I just need towels. If you want to just trade towels, that's good. How's your day going so far? Good? Good. Thank you very much. My wife will probably give me crap now because I didn't get him to come in and make the bed. Whatever. Monthly chart. What do we got for a monthly chart here? Ooh, do you see this, Craig? Do you see this? Look at this, my friend. Monthly discount array, smash it, tap it, and go. That'll bring us right back into this big cluster. So that's monthly. Your weekly is right on the consequent encroachment. Let's go to a daily. Let's see if we got some overlaps. Oh, what are you looking for? Craig, what are you looking for, buddy? I'm looking for a monthly, weekly, daily overlap. Look at them. You see that? And they're all on the consequent encroachment. All their consequent encroachments line up. Guess where I'm aiming for? You come down, you come down and nail that spot right there, and then see if it starts to look for a daily reversal or a 4-hour reversal inside that monthly discount, weekly discount, daily discount. You see it? I have a resting order in at 164, 171, anywhere from 172 to 169. You have a 164? Yep. Might be a 1 or 2 pennies. Oh, you're running just below here. I got you. Good place. That still puts you in a daily, monthly overlap. I love it. Yes. We'll keep our eyes on that one there, Craig. I like it. I like it. TransAlta pipeline. Where's TransAlta coming? Dare I say it? Dare I antagonize my oil friends and say down here? And my friends are going, what do you want? You're on crack, man. There's no way it's going down to $8 ever again. $9. It's never going that low. Never say never. Never say never. That's weekly. Oh, I thought it would be a disaster, hey? If it got down to $9, I would have lost half of its value, more than half of its value. And the fact that we've actually traded below market structure, we've got a shift in structure, and we ripped straight through it. We didn't even come back to it. Even in that one candle that we had from high to low, did we even come back to 50% of that? We did. Okay. So that whole day, you were traced 50% of that day. And keep days like that, this thing in play. So when you see big displacement days like that, take the whole day and look for 50% retracement on it. And then look for lower time frames to catch a continuation. So continuation. So if that was 50%, you're like, I'm not sure if that's the low. If I see this reversal here on the daily, I'll catch that for a reverse. It trades below it here, comes back up, gives you your perfect entry for a short, extends the range, takes the low, got your reverse, trades above it, comes back inside it here, runs back all the way back up into premium box. Discount, premium, hits it, reverses, comes back. Do we trade through this level? Yes, we do. Do we trade back inside it one more time? You do. Continuation on the downside. And you catch that for a run, aiming for old lows, 50% of this wick. We hit 50% of that wick, and then it retraced a bit, and then gapped down and took the low. Below 50%, you go, now we're going lower. It gapped open below it, and you go, now we're running for the lows. It takes the low. Now you're back inside this little imbalance sitting right here. Do we climb up on top of that and start to get back inside this range? Or are we just going to roll over here some more and start coming lower? So that's what I'm looking at for TransAlta. TransAlta. Next Wednesday. We're looking for next Wednesday. I'll be back in the block on Wednesday evening. So Thursday morning we'll be catching any reversals. And you got the following week, we got that ICAD. I'll be looking at that ICAD. You might be able to catch yourself a little bit of investment in that. And I do like this to continue coming lower. $25. Bank of Montreal, Bank of Nova Scotia, still looking for 67, $68 and beyond. CIBC, tanking. And dare I say it, to all my TD Plus members, and where would that put us? Right to the bottom of our suggested level we've been looking for. Each and every asset, when it did this on the February 3rd, gap down, that's the price they're setting. So TD, that's my TD, eventually will catch up to the rest of them. That's the only bank left to run that low now. Yep, no, Where's this one? This one here. TD and Bank of Montreal are the last two to come back and reclaim that. Scotia's going to get that, but those two are the last two to get back in sync with everybody else. That's what I'm looking at there. How's our YM doing? See how we traded back through it, tapping the consequent encroachment. And now you're looking to get back inside this range. Look for 50% of that range. Mean threshold of this candle is holding price right now. You can get above that. Find support in here. Look for this little imbalance at 41.51.3. And then see if you can get above that and run for a higher one. A lot of chop. A lot of chop. Any questions on anything here? I don't know if my screen is resetting. Yeah, I didn't think there was that many people in there. It said 30 something. That's going to be it for me, you guys. If there's anything else you want me to look at real quick before we go, let me know. We're really happy to look at it for you. I'll give you a few minutes. If you have any questions, any concerns, anything else you want me to do, let me know. I got a few more minutes. If not, you guys have an awesome day. We'll see you tomorrow. And I'm sure, Hadi, you'll be on the Telegram channel, catching any trades if you see them. I don't know if this is your kind of market to play in either, but it's really choppy for me. There's too many wicks to participate in NQ right now. There's just a lot of wicks. They can take you out. So I will focus on a few more trades, and I think there's a couple more $100 I need to get back to that break-even level. So I'm going to be focusing on that. And I'll probably work on that with abs this afternoon, and we'll take a couple of trades and we'll get into that stress-free place. So I'm gonna take a break now, and I'll see you guys tomorrow. Tomorrow is what is it? Wednesday. Wednesday tomorrow. It's my last day, and then I'm heading out to back to Canada. So I'm gonna enjoy my last day with abs, and I'll see you guys. Or maybe I'll get to hang out with him again on Wednesday. His wife's gonna be like, "Look, you guys." Open midnight candle and our regular trading hour gap. We're back inside all of those levels again. Looking for these 830 inside our range now. Those are all upside areas to reach for now. All right, I'm out of here. I will see you guys tomorrow bright and early.